All right. Good afternoon to everyone. We'll have people, a whole bunch of people are going to be viewing this as a recording. So it will be recorded. Everyone will have access to that recording as a member of OA1 trading service. And the first thing I want to do is say welcome and appreciate so much your commitment to bettering your trading and to discovering the tools that can create success for you that will limit your losses as well as strengthen your gains. So today we're doing a beginner's basics, and so please do not be insulted in any way with some of the things that I'll be sharing. Some of the things may be very redundant to some of you, but I'll assure you that there are things in here that even advanced traders have told me that they had not seen before. And so with that, can someone try to chat in the chat window? I just want to make sure people are in fact seeing and hearing me. We could start by that. That would be helpful. I'm not seeing any chats. I'm going to assume that they can hear me. Maybe we can get Thompson. I'm just making sure for your benefit that you are in fact hearing and seeing what I am presenting. Are you able to see and hear the presentation? Okay, so there's no chat option, but people can see and hear me. Maybe I just don't want to hear from you today, but I will make sure you have the email address to give questions to. Thank you, Terry. All right. All right, so we're going to get started because we have a lot to get through. Obviously, you're looking at a live picture of SPY that happened today, and we'll cover some of the things in our charting when we get to that. And we'll show how that would have been used today, intraday, as well as what today means in terms of our trend and things of that nature. But first, what I want to get to is an introduction of information that is very pertinent to trading. And so I'm going to go to out of here for a moment. That screen, you're seeing a bunch of my alerts. Here we go. Okay. So it is our goal at OA1 DTS to both train and educate people to make better trades, but also to be able to spot opportunities more efficiently and effectively. And so part of that is some of just the basic things. I know that we have some people that believe in the star system and they're Scorpio and things of that nature.
Click on audience over there.
On what?
Audience.
There. Now you have chat. I see you all. So Jeff is going to be the, did you see his head come in? He's going to be the moderator. Not promising that I can get to quick Q&A today, but here's a commitment I will make. If we need to have Q&A on some of the things that I'm presenting, then I will commit to having another session that is strictly Q&A. How's that? Throw that in there. With this, we are not looking to use crazy things to make our trades, but someone in Houston, a good friend, asked me about getting into trading, and I said, well, there's some rules. And the first rule is the risk adverse need not apply. If you are risk adverse, then this is something that is not for you. So risk is part of trading. Risk is going to be every single time that you push the button to execute, you are accepting risk. And so each trader has the decision to make ultimately. Even with this service, and the service, I'll give a brief commercial and then continue on. And the OA1 DTS is basically taking a lot of the information that you're going to see today, combined with the advanced tactics, and you will then see those in terms of real-time trigger events that you will receive a text message alert to execute trades that you deem are worthwhile for your trading strategy. So each individual can make your decision. You will have the setups pre-given. I'll share some of those today. Even in the basics, I like to share those setups. But each individual trader can make that decision. When I send a text alert, it will include the trigger price, what to watch is going to be covered before you're receiving that text in the daily watch list type of events. And then when those things trigger, you'll have what to be looking for in order to enter a trade with the highest probability possible. That's what my goal is to do. I understand you are putting money at risk. If you follow a trade that I am giving, you are putting money at risk. I take that as a tremendous responsibility. Those of you who know me know that that is paramount to me in terms of things that I relay and share. And so when that triggers, you get a text that shows the entry price when it is time to execute, the stop price if it fails after executing, the trim message on there, and then your target for the upside target that you have. And again, we'll cover a couple of those today. Read the text on there and see what people are saying. So I have friends that may be giving me information that is impertinent to you. So risk adverse need not apply. Number two, don't drive a Prius in a Formula One race. I see people trying to use bad technology. You are not going to be successful trading. You have got to have good internet connectivity. You have got to have good equipment in order to compete out there, especially if you're trading in a more compressed environment, would be intraday. You're going to need good equipment. You also need to have all of your preparation in place, but the equipment aspect, I see people trying, as well as the platform that you use. I use IBKR. I have a backup platform just in case IBKR were to go down. I'm never disconnected from the ability to manage and trade. IBKR is my preferred because they offer 4.58% for money that is parked, which is a great advantage for money that has been sidelined, like during the bear phase of the market. I had my trades, but I had the lion's share of cash built up, and waiting for the correction to end, the bear market, as it were, to end. So do not try to trade through platforms like my friend tried to Fidelity, and it took him, a little while to make that trade. Schwab, Edward Jones, Merrill Lynch, all of those they may be wonderful brokerages, but they are very trader negative is the best way I can put it. So another thing to consider with your platform, extended hours. You must have the ability to trade extended hours if you are going to be a professional trader. Here's an example of a stock, and it's CIDM is the name of it. Doesn't matter right now. I wouldn't even bother with it right now. But here is a time in the past where we had bought at 71 cents. At 5:15, that's 4:15 our time in the morning, Central Time. So this is IBKR is giving it from Chicago time. So at 4:15, after the markets had opened, not very long in the early pre-market session, opens at 3 a.m. And I'm not saying you have to be up every morning at 3 a.m. I'm just saying if there is a trade that you are specifically watching, you have the ability with certain services to set alerts that will wake you up. And so here is CIDM. It ran all the way up to $1.45 in the early pre-market session. And if you had slept in, if you had not been ready to execute on that trade, you missed it because it came all the way back down. And you can see that by the opening, we were down to $1.10, and then it settled all the way back in. And you can see how the volume opened on it. It hit resistance at $1.10. It couldn't pass it again. And then it continued to consolidate. And that was your high for quite a period of time. A lot of people that were following this trade with us ended up being able to buy it back, I believe, in the 81-cent range after selling in the $1.40 range. That's professional trading. That's what a system will do for you. But you have to be part of that system as well. So don't try to drive a Prius in a Formula One race. That's number two. Number three, casualness leads to casualties. If you are casual in your trading, oh, I'm just going to try this. Oh, I'm just going to do. If you are casual in your approach to trading, it is a recipe for disaster. Have a plan. Only execute when that plan develops according to the structures that were there, the opportunity horizon that was seen, the target levels that were triggered, and with all views of the macro market. And if the market's trending down, we had Ribbon today, right? RIVN, it jumped and broke finally that key 1580 mark, flashed up to $16 where we trimmed and sold some of our calls. I did a whole bunch of things that I tweeted about at that time because I had a lot of shares. And that's the advanced course. I'll get into that in the advanced course. But we are not casual in our approach. And that would have been in that original text that you trim when 1580, which is a major resistant mark, it gets tested. It will break like a rubber band. Think of it like a rubber band. It breaks and it flashes above that level as the bulls try to push and break the bears back. And then if it fails, it will drop. And you saw what happened today, which was complicated by a descending market as well. So you had everything working against you on that stock after it attempted to break out. And I tweeted, we have a failed breakout. And I believe that was at about 1570, 1562, somewhere in that range. So you still had plenty of time to get out with probably a 30% gain, 40% gain, whatever it would be. So don't be casual in your trading. And that also goes obviously with number 4. Use strategies to reduce risk. Again, there's some advanced strategies. The simple one would be, it's a failed breakout. We knew 1580 going into this trade was a key portion that, number one, when we entered the trade in the 14s, when we see the volume building, our assumption is it's building and it will go test the 1580. That's what we're looking for. We planned for that 1580 to be tested. It was. That's, to me, a successful trade. The setup was correct. The setup said it's going to break out from where it had been having difficulty on the 5-day chart. It broke out. It ran very quickly up to the 1580, jumped up to 16, and then failed. You're making your trades during that test to get out, make sure that you're protected to your downside, and then you watch it. And if it fails back, I tweeted it's generally going to come back and retest. It did. It dropped down to 1668, and then it went back up to 1596. So you had 2 shots to get out if you wanted to. If you were a smaller trader, that would have been probably a great, 70, 80% ROI trade for you. What are you doing? I'm building my money. I'm building my account. Take that 70 to 80% and let's move on and wait for the next trade to develop, or let's wait for confirmation. You can always come back in, because if it confirmed, we would be looking at a rally that would have taken it up into the mid 17s to start, ultimately up to about 1950. So always use strategies to reduce risk. The simplest strategy is to either exit at a good ROI or at least trim to where you're protected to your downside. Now, I on that stock, I said reduce strategies later in the day. I was like, do not lose money. Do not go negative in that stock in your options. Do not take a loss. So whether you had trimmed or not, you do not take a loss, because generally when you have a strong reversal like that, you go through a cycle again. And it's going to be, whether it's 3 days or 30 days, we don't know what that might look like. So that's why it's so important to manage your trades effectively. And we'll talk a whole lot about that as we go. From my friends in Houston who said they don't know the difference between a hockey stick and a candlestick, there it is right there. That's a hockey stick on the left, and on the right is a candlestick. Now, a candlestick is something that you're going to absolutely fall in love with because they tell you everything that we need to know about stocks and activity, trend, institutional buying, block orders, everything of that nature. And I'll be getting into some of that when we get into charting. But as a general rule, when you see a candlestick, and I know, again, this is remedial for some, so again, this is a beginner's basic. If you look at the green candle on your left, what you have is you have the open of that candle is going to be the lowest level of the green. And then if it drops down anytime after that, you get what's called a wick. Okay, so we had a wick in this illustration. There is a wick down to the low. And these could be any time during a minute, 30 seconds, 5 minutes. You're able to go in and select which view you want. But the candles themselves are never going to change. They will always be an open, a low, a high, and a close. If it starts low and it ends up higher than it opened, it will be green. Conversely, on the right, if it opens higher and it ends up lower, even if it's a penny lower, that candle is red. So if it had started at 99 cents and it dropped down to 50 cents in that major candle, and it came back and it closed at 98 cents, that is a red candle. Even though it was only a penny, it was below the open. So that candle would look very compressed. Okay, you would have very, very tiny slice looking red candle at the end with a very long wick below that. And so I'll show some examples of that as we go. So that is how we look at candles. Okay, when you put them all together, they start looking kind of different to people. And so it's very important for us to spend a lot of time today in charting patterns of how those candles look and tell us things, how sometimes what they tell us end up being wrong, and what those triggers would be if they are wrong. And so we're going down to the first one, and I promised everyone that I would give my most favorite pattern in trading. And that, here we go. My most favorite trick, if it's any business, other business, I don't want to hear it. If you have one thing taken away from this that I think will make you a whole lot of money, it is what I call Model T. Now, Model T is nothing but a fancy word for a 50% Fibonacci retracement. So let me go, how do I get back out to share my, okay, I want to share my screen. What do I do here?
Right there. Click that.
Okay.
Sure. Down at the bottom.
Okay. Now how do I get it on here? Because I want to get back out of this and show my screen now. Here we go.
Yeah, like that.
I want to go back to the actual live.
There you go.
Okay. So let's take Adobe. Here's Adobe right now. If I went up here and I hit edit and I said I want to look at the Fibonacci retracement. By the way, all members, we will spend time with you as the service. When the service starts, there will be both video as well as live sessions with you sitting at your computer and us instructing you where to go on your computer to click and to add all of the tools that are available for being able to trade. That is one of the biggest things I see people struggle with. And so it's something that we are going to spend invest our time to make sure that you are set up properly. So what I did here is I started at the top of the candles, all of these candles, and I brought it back down to the lowest candle. And I released that. And this one right here is the 50% retracement. And it gives you the numbers on the screen. I don't know if you can see that, but this golden one here, I made it gold in mine, is the 50% retracement. What that means is this stock right now, Adobe, is sitting at $520. If we got into a severe correction, there would be two opportunities for a Fibonacci retracement, or what I call Model T, because most people just look at this as their Fibonacci, but it happens in multiple ways. Let me clear it. And I'm going to come back in here and I'm going to pick the Fibonacci and I'm going to go up to this top one. And if you can see right here, the last breakout that occurred after a pullback, okay, that's what is called a mid-trend retracement that occurred. It was a 2-day retracement right here, it retraced 2 days, and then it shot back up. I want to take the very last time that occurred from the low to the high, and my first level, 467, is what I would be looking for in a retracement if the markets turn south. That would be Adobe's Fibonacci Model T, I call it. And the reason I call it Model T is if I drew a line through this, let me get rid of that off the screen. If I just drew a line down here, yep, let me get rid of that. Do it again, remove it. Okay, if I took a line from the top and basically down to this bottom here, and that calculation, it's going to make a T on your chart. And you can do this by hand. I mean, sometimes I'll do it by hand over the weekend and you always want to know your Model Ts. It is the single most important thing, in my opinion, in trading. Because when trends reverse, 96% of the time, a Model T is reached. 96% of the time. Could you make money knowing that once you get a trend reversal confirmed, which in the terms, in the case of Adobe, would be right here, okay? This area of support right here would break. You still, I'm sorry, you would need, well, this would be just the daily, on the daily Model T. You would need a break down below here to be looking at the full range Model T back down all the way to here. There would be one from right here as well. Right here, again, you had 2-day pullback and then you had a breakup. That's another Model T that you have. You want to map those out. You want to know what those are because inevitably this one, the very first one, guess what? It happens to fall in a major support zone. So the odds of a bounce off Model T upward, it doesn't mean that they're always going to hold the Model T, the Fibonacci 50% rate retracement. It doesn't mean that it's guaranteed to hold. What it does mean is almost every time it first reaches it, it will bounce. You will see over and over and over again, and just test this out yourself on your platforms, and you will prove it to yourself very, very quickly that it happens over and over and over again. I'm going to let me get rid of all the trend lines. And now let's go into the intraday. Let's go to the 1 minute candle and see if we can come up with one here, intraday. Okay, so we have a breakdown here. It started off not so great, didn't it? It popped up and then it dropped all the way down to here. The 50% Fibonacci was almost reached, but was not quite reached today on that. Generally, when that is reached, it's probably going to be a bullish indicator more than it is a bearish. This case, the fact that it couldn't even reach it, and you see all this testing below right here, that tells you that there's some block orders that were just enjoying the selling at the spiked price that occurred today. They were just emptying and getting rid of their positions at this price, and it bumps up against it here, 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 and finally the bulls got the message and they let it go. And then I imagine, let's try something else here. Let's clear it. Let's try from, well, we know that this one beat the 50%. If I take this range down to here, that was probably the 50% retrace level right here, between here and here. 50% retrace was right here. It broke above it, which probably gave the bulls a lot of excitement at the time. And I'm sure the markets at that time, that's when those markets jumped back up some. And I'm sure people were thinking, here come the bulls again. But that block order was still there, which is why you want to have that marked and monitored. And if you notice, what occurred this time is the smart money, the smart portion of the block people lowered their price so that they were getting filled because they know that the other orders are waiting to fill at that level. They dropped their price, and that's why you see this occur. And so it failed again, and then it started into this trend, downtrend throughout the afternoon then that was very easy to spot and see. And so that was the end of the day, end of the sell-off that occurred into the macro markets. So that is an example of Model T. I'm going to see quickly here, go back to my presentation. Model T. This first one, by the way, MGNI was a mass accumulation trade. And what I mean when I say that, and I'm not giving these very often anymore for certain reasons. Yeah, I'll give 30,000. I'll give you on that one. On the Model T, what you have here was MGNI. We bought this like crazy under $7. I think it dropped as low as $5 or $6. We just kept buying it because the fundamentals looked great. We knew that there was an election coming, and they are in the content management aspect of those things. And so we knew in our minds, we were convinced that it was going to be a major winning stock. Well, it broke out and it went to $14. And I'll give you another strategy right now that is critical. Underline it, highlight it. I don't think I cover it anywhere else in this seminar. And it's called net free trading. Second only to being able to get to a profitable winning mass accumulation or winning trade in options where they've doubled in money, gone 100%, is going net free. And that simply means if I spent $2,000 to enter options and they go up 100% and are now valued at $4,000, I am going to sell half of those options and get my $2,000 back. I'll have $1,000 in profit sitting there, but I'm getting my money back out of the market, especially in options. And I encourage everyone to do that. In long-term investments, long-term stock investing, I recommend doing the exact same thing. Why? Well, because you've always heard diversify. You need to diversify, and that's a biblical principle, right? You have seeds. They talk about the sowing of the seed, and some fell in rocks, some weeds grew up in them, some were stolen by the birds, others took root and they grew. It's the exact same thing in life. It's the exact same thing in the stock market. Nothing is unique in that regard. Some of the long-term stocks you are in will be absolute dogs. Some of them will be mildly successful, but after a period of looking like they're going to be the greatest thing since sliced bread, they are going to mold. And then others will become your NVIDIAs. Others will become an MGNI, a NEO, although NEO showed us another example of that. But MNGI, what happened here with MGNI is it raced all the way up into the 2950. And I posted to everyone that I am selling out of everything. In other words, I made a decision not to leave any of my holdings because of how fast and far it had risen. That's an individual decision, but I made that decision because it was above my target was $25 that was stated to everyone that followed. I said, my target's 25. We got this spike up to 29.50. I'm out. Someone calls me in a panic and they say, Randy, I didn't do it. How far down is this going to go? And it was right then at about 23.84. And I said, well, it could keep on going down. But as we were talking, I said, let's watch it together for a moment. That would be part of the OA1 DTS service. I would be sitting watching these type of trades, and I would say, let's have just a little patience. You're still net free. You got net free at 14. You're working on the house's money here. So yes, it's painful to watch all of your gains go, but let's just give it a moment, because look at the volume signature at the bottom. Look at this volume signature. And it was getting bigger and bigger and bigger. And you always end up with this, I don't think I can move this, but this line where there's no volume and then this huge volume, and then you start seeing it subside. Generally, that's telling you that the selling intensity is diminishing and leaving. Very key. And so I told him, let's just hang on, because you have this massive green candle following the red one, and it reversed. Let's see if you get that reversal confirmed. It did. It confirmed. I told him, mark Model T on between the high and the low. That becomes your new exit price for those shares now. He did so. He exited when it got above 20. I told him $26 because it's a big round number. Psychology of the human nature, whatever you want to call it, when things hit a big round number that on a move, they tend to flash above. And then if it's going to continue, great. But generally, if it's a target market and model, and that's what we're at, Model T was predetermined. I had told him exactly what to expect. And that thing came back up to 26. It flashed above 26. He exited. Pull up MGNI on your computers now. And you tell me if disciplined, managed, net-free trading is for you or not. Because that's what we preach, that's what we teach. We will trade long term, we will trade short term, we will trade breakouts for a very quick gain. And that could be even a day trade with options. And I'll show you a couple of those as we provide. So I'm spending a tremendous amount of time on Model T because it is so central to your trading. Start looking at all of the stocks out there and look at 50% retracements as this market has been going up. Look how many Model T 50% Fibonacci retracements occurred. It's a bunch all the way. So if you saw a trend moving up, and we're going to move into trends, I'm not going to belabor Model T any further. Here's net, another one that we entered on the breakout. And again, you know, it went all the way from 55 up to 65. And once it broke down right here, this candle, engulfing candle, meaning that it took out all of this. It took out the preceding candle. It took out the structure of support that was trying to be made here on the 5-day, and it broke down through it. Well, when it broke down through it, you can pretty much count on Model T is going to be coming. And look at that. We had one candle wick break through Model T that immediately reversed. You think that our people were giddy? We were entering that for a quick trade just to get another $2, $3 out of that. And so we made the trade off of the bounce, and then we were done and got out. But this was a net free trade, as you guys in the forum know, from way back here as well. Trend reversals. We're going to talk trends and reversals for a moment. You want to draw trends, and I know you've seen people on Twitter, and there's some very talented traders that are going to give you they have charts with lines going everywhere. And I mean, it looks like someone had an Etch-a-Sketch, it gave it to a 5-year-old, and they let them just make lines all over the place. So those can be important. However, your macro trend lines are your most important lines. And so they are the steering course for what you're doing as a strategy. And when you're working, I see too many people trying to work against a trend. Right now, the trend has been up, and you see people jumping in, trying to short, and they've been getting crushed over and over and over again. So you want to stay with the trend until you get a change of structure. This right here was a change of structure that occurred, and I'll show it again in a different slide. But if I drew this line on a continual pattern, you see this break above, that would be my first signal of a change of structure that's occurred. My downtrend line has been violated. I begin looking at that now, and I watch for a retracement that comes back. And when that retracement comes back, I'm watching to see if that previous support level holds. If it does, and then it moves up, and once it breaks, and it gapped up right here, by the way, it always seems to gap up during when it breaks. It's because everyone and their dog knows what's coming. And so big money just makes that gap occur because they're already flooding the market with money, and you have this longer candle right here on that day. That's a change of structure. You're no longer trending down. You are now in an uptrend. And so when this happened back in, I think March is when March or April, that we were going on the bull side of our trades from that point forward. Prove us wrong once that trend is in place. After coming off such a massive drop, prove us wrong. And something that you'll notice, I'll get to it in a minute. We're going to keep on going. Okay. Also, a very key thing that you have is called the MACD line. I'm sorry, the EMA, which is the exponential moving average. Now, that's a complicated little pieces of words that simply mean I'm taking a certain set of the bars that are represented in my candlesticks, and I'm going to weight them against each other. And it divides by the number of days, and it'll give you the average price on those days. And that ends up as these lines here. Let me go to the live again. And we're on Adobe. Let me get off Adobe. Let's go AMT. And let's get to a daily chart. And let's make it big. Okay. So here you see a number of lines here. The blue, I have it represented by the 200-day moving average. What that means, the exponential moving average. What that means is if you took 1, 2, 3, 4, 5, and just kept counting 200 candles, 200 days of candles, and then you divided it by each other, you would get an average. And it tracks that average each day backwards. So it is a trailing indicator, obviously. The only forward trading indicator that you have is me. No, joking. So it's a trailing indicator. But this is the 200-day. Then you have the red, which is the 50-day moving average, exponential moving average. You have a 20-day. And then ultimately you have an 8. Some people use the 5-day moving average. I like the 8-day. It gives me a clearer view of what is occurring on a up and down trend stock. If you notice, we're below the 200 in AMT right now. It's been languishing. If I drew back all the way here, where it broke during the start of the bear market, it dropped all the way down here to what, 177. And then it bounced. Actually, it came back up here, dropped back to guess where? Model T. Dropped back to Model T, and then it exploded back up. As soon as it crossed right here, you have a trending stock now going up. So you could work that trade up until it broke that pattern. But it's all below the 200-day moving average. It's below the 50-day moving average into right here. That means that there is selling pressure. As long as you're below these indicating exponential moving average lines, that means that there is money flow going out of the stocks more than it is coming in. So any gains that come typically can get lost until those cross back into a positive. And what the order of sequence that you want to see for bullish is you want the 8-day at the top, the 20-day underneath it, the 50-day underneath that, and the 200. And I imagine if we did look at Adobe, we're getting crossed over right now. Look at that back here in May 25th or so. These lines all started, they converged right here. Okay, they got really tight. That tells you a big move's coming. Is the bear market going to continue? Is a reversal going to occur? So, is it coming back, or are we going to have continuation? Well, once these got in line, and now what you have is the 200, you still have the 50, that's in the proper sequence, but look at this. The 8-day is still below the 20-day, okay? So we want to ultimately see this above the, oh, no, I'm sorry. I don't know why this is done this way, but the 20-day is yellow on here and the 8-day is green. So this is actually in a perfect sequence now. And that tells you the major bull move is underway. You have accumulation going on. They are buying this. They're not even looking at price, the big institutions. They just want it in it. And so you get this 8-day moving exponential moving average, and notice how it supports all the way up. Anytime it got violated, it immediately shot back above it. This is a strong trending stock buoyed by these lines getting further and further apart. And so it's something that you would want to be very cognizant of is your moving averages. If you're buying a stock like AMT, let me go back to AMT. If you're buying a stock, if you notice, we're coming together right now. All these lines are converging. Where were they at their widest? Right here. They were at their widest level here. But since then, they've started to converge. They widened back again and kept going down. And now they're coming back together. This is basically where Adobe was in May. You're looking at AMT and you're saying, are we going to lose this and break these bands apart and going back into further selling? Or are these bands, is the 200 going to start closing in? And that would take probably a breakout above around 200. You would get that blue line moving down, but more importantly, these three would start getting in line in the sequence that we want to see. With the 8 being the closest, the 20 underneath it, the 50 underneath that, showing that you have buying support. That continues, the 200 will take care of itself. So that is the EMA. It's called exponential moving average, and the 8-day simply means it's 8 candles divided by the number of candles gives you an average. And then the 20, it's 20 candles. The 50 candles. And by having those 4 candle sets, you're able to see how the lines are intersecting to show trends amongst those moving averages. And as they get real tight, that tells you that something's occurring in terms of support. For a downtrend stock, takes support buying for those to start collapsing. For a uptrend stock, it means that they would be expanding upward out of a breakout going upward. If we need to cover that more, we will, but we're going to move on. Here I used Apple, and if you can see Apple, you have the 8-day, and the 20-day represented. Sometimes when a stock is clearly in an uptrend, I won't even have the 50 or the 200. I'll layer it in once it breaks these two, but until once I got this to right here, I eliminated the 250 so that I could just be looking at this. And I see every time it came down and touched the 20-day exponential moving average, it bounced. It violated it here, but then the next day it had a major rally. It had a sell-off and it violated. It actually went down and closed right on it. And your alerts start going off when that occurs, but then you wait. You don't panic. If you've been in the stock from back here, let's say, you go ahead and wait. Now you could be taking some strategic moves to protect yourself in case it failed, and that's the advanced seminar. We'll talk about that. But otherwise, just hang out and wait until at least it would lose the last support right here. So you're risking about $5 on a stock that you've gained around $20. So it's worth the risk because of the macro market was still in an uptrend showing itself. Now, once that broke back above, you're golden again. You're just watching and you're sticking with it. And if you notice, Apple is hanging around now. People were frustrated. They thought Apple, during this big squeeze, they thought that Apple would really be at 200. And I'm looking for Apple to break 200 personally, but it just didn't happen during this sequence. It's going to take a consolidation and cycle, and then once it breaks out again, I imagine that we'll see a pretty strong move that would take it to 200 should the bull market continue that we have. And it is a bull market. Don't let anybody tell you different. But your trend lines on this are pretty easy, right? Oh, I'm not on the live screen. You would draw a line right through here. You would draw a line right through here. You also have this line and this line and a change of structure. So that would be a caution point. Anytime you see a break of the trend line, you're taking strategic moves. You're taking some profits. You're doing covered calls. As soon as this level right here was broken, you're taking covered calls unless you are aggressive and wanted to do it up there. But generally, it's after it breaks this level, the previous low, then I'm taking covered calls. I may buy some puts just in case it continues to drop. Then I have kind of a double protection on there. And there's strategic ways that you can do that we'll talk about in the advanced seminar. But when that trend broke, I wanted to see a resumption of the trend. And if you notice, these two lines converged, and that you were waiting to see how did the convergence and the lines finally separated again. And guess what? We were back in active sequence. They were sequenced exactly as you would want. You're going to stick with Apple, and so that's how we look at the EMAs on a daily, longer term. Is we're looking to see how the stock has reacted. And so if Apple right now were to come down to that and touch that 8-day right now, and you can figure out what that is. I don't have my other scanner up right now, but you can pick the price. It looks like about 177, 7-ish. And it came down and touched that, then you'd be a buyer. If you didn't have Apple, you would be a holder. If you did, you would cover your covered calls. If exit them, buy them back at that level, so you earn some premium through decay as well as just time, and you're feeling good about that trade long term. All right, here is a trend, and I want you to always draw these trend lines. This is even on a 1 minute intraday for SPY, and what I was looking for, this was back in February 25th. What I'm looking for is I see the markets are trending down, and so you had this intraday channel, you had a raise, and then another intraday channel, and then a change of structure attempt here. It bumped up against this line, and I'll cover those in the advanced seminar. We just don't have time today to get into that. But you watch these trends that are occurring and in the breaks in those, because this is when the market's determining, is that low enough? Am I going to, are people going to buy at that level, or do they think it's still not a good value? And ultimately, it kept going down. When it got to this very tight, you see this right here. When it got real tight on it, it changed the trend, and it was kind of a change of structure that was occurring because it's different looking. When those get tight like that, that generally means a bounce is coming. And so when you've had these wider open channels here, and then they start collapsing in, that generally means a bounce is going to come. Now, doesn't mean it's going to hold, just means it's a bounce. And I imagine that 90% of day traders that don't have the experience, aren't watching all of the other factors involved, probably get caught up in these type trades more than anything and lose money. Because they think that it's reversed, and sure enough, it just starts collapsing down again, and then it bounces, and then they think See, I knew I was right back here, and they buy back again, and then they go into this and they lose it all again. So we don't want to be that way. But what happens in trends, this is an intraday trend, but it also happens on the daily trends. What tends to happen, and this is so central and key, make sure you're making notes on this. I'm speaking it so people can review it. You see how all of these are going kind of at these angles here. These are a little bit steeper than this initial one. Okay, they're a little bit steeper, but note this one here. Note how steep and then how prolonged it became and how accelerated it became. And then you start looking at your volume candles and you see this volume build, build, build. When that is occurring, this acceleration bottom is basically a liquidity grab. And what that simply means is that you have all these traders that have been watching this and they have a pain tolerance threshold with their stops at a certain level. The institutions will collapse the stock down in this escalated sell-off in order to capture all of the stops. And then what they'll do is they tend, if it bounces here like it does, it will drop into a new low. And I call that a tricksy move. I call it something stupid so that you'll hopefully remember it. But it's a tricksy move. And all it means is they're trying to get you out. Some people are saying it may be getting a little blurry. When we do this, we'll make sure that the presentation that you're able to access does not have blurs in it, but just in case you are having some blurs, probably your bandwidth, but it could be system-wide. But this right here, I call this tricksy move, and you notice it took the largest candle and it flashed down and then it quickly reversed and we had these green candles. As soon as this is broken to the upside, that would be your first entry attempt for the day. Oh, the mouse movement is blurry. Sorry about that. I will refrain from moving it, but I do have to show you some of these things. So when it came back up and broke that, that would be your first entry today, and now your stop is a new low. So your stop becomes a new low, and you hold with the trade. Now, when it moved, and by the way, I think I might have this on the next slide. I can't remember if I did or don't, but I don't think I do. Well, this reversed up, and we went up to in the 392, I believe. So it was a great trade. The cluster movement does point out where the move is happening. Yes, yes. So, and you'll note that volume parabola that occurred, highest volume of the day on the 5-minute. I wish I had a 5-minute chart. You would have seen the massive spike compared to your other 5-minute charts. Maybe I have one here. I think I do. In fact, say no more. Here is Big C. Big C was an IPO, and I gave this on Twitter. It had dropped down. I can't remember where it IPO'd, up in the 75, 78. But then it dropped down and it started through this consolidation phase. And I kept watching for an opportunity. I noticed that that downward path that we had, not what you're seeing on this, but the daily chart, it was just going downward in trend, and then it flattens out. And I've got an example of that recently that I'll show you, and you know how I've been on the China stocks. If you've been following Twitter or a forum, then, and don't be asking about the forum, that's something that we'll have a forum on the OA1 platform, but it flattens out. Well, when it flattens out, that is a change of structure that has occurred. Okay. And yes, someone pointed out that you have a nice Model T. You actually have a couple of them. You had this as a Model T, and this drop here created a Model T as well. It actually went a little bit above the 50% margin. And then it kind of just stayed in these zones. You notice the W pattern. And we'll talk about that in a minute. Here's a W pattern. This W pattern didn't come up and break this. That would be what I would consider, that's a big W, but that's what it would take in order for this pattern to be successful. This one, it is right at it. It hadn't proved itself successful or not. But you have a 1-minute chart that had all of this volume occurring. And if I move to the 5-minute chart, you see it. And this is why you need to have on a stock that you're waiting, that you've been waiting for to execute an entry, you got to have a 1 minute, a 5 minute, and a 4 hour chart open. And I'll explain that a little bit more, but obviously I think the explanation becomes self-explanatory. You see this on the 5 minute accelerated drop that we talk about. They accelerate into a bottom. You had this massive sell candle that occurred, and yet it could not break down from this wick. This first wick here, anytime you see wicks, you start thinking to yourself, who is the buyer there, and are they going to remain? Is it a block order from an institution? That's exactly what this ended up being, is a block order from a major institution out there. I actually know who the institution was, and I'm not at liberty to tell you, and I did not know, I'm not violating SEC laws. I did not know at the time that they were going to be doing this. Let's make that clear. But I spotted this. And when I was told that they had bought Big C a week later, I said, I know exactly where you bought that. It was a big institutional trader. And I said, I gave them the price that they bought it. And they said, okay, I got to get the mouse away from there. And knew it was them. And I knew what price they were at. And his mouth gapped open. And he said, who in our company told you that? He was searching for an SEC violation. And I said, there is no SEC violation. It's called a 5 minute, 4 hour, 1 minute chart. And so I showed it to him because I had shared this with, in real time, I had shared this with Twitter. You can go back, look up Big C at Old Army 1 back in January 15th. You'll see I posted this on Twitter and I said, I'm buying. And I'm buying big. I even think I said I'm buying big on that tweet because it was a stock I wanted in. I wanted in both of the SaaS stocks, software as a service sector. I think in the long term is going to be a big one. I was just looking for this initial move with Big C. It ranged up. Now let's continue. I don't know. Do I have the next slide? Is Big C? Okay, so this is where all of this is occurring. Okay, we're back on, this is a daily chart. So this is all occurring here. And then it shot up and it confirmed by breaking this high right here. You see, I know, again, go back. Let me get my mouse off there. From where the arrow is pointing up on the far right, it has the beautiful green candle. You have 1, 2, 3, 4 candles back. You had a high that was rejected, that dropped it back down before it shot back up and went above that candle. That is a technical reversal. We do not know how long it is going to take for it to break through the next resistance point. And you can see I charted the resistance points for everyone. And I said, look, if you went options as well as shares, how can I get this in full screen mode? Let's see. From current slide. How do I get out of the
do display settings?
Yeah.
Swap.
Yeah, but I don't. Did that do it?
Yeah.
Hallelujah. Okay, tell me, guys, did that get rid of the ghosting?
Put it back up there and I can tell you real quick. So when you
It's on there. So what are you seeing?
look over there on your live stream, put your mouse up there. Moving around.
Yeah.
See
Well, that's ghosting a little bit, yeah. But is the image clear? Is the image clear? That's all I care
The
about.
image is clear.
Okay. Well, so here was the previous high. You see, you had these. I have to go slow is the problem. You had these resistance levels, and I charted them. You would expect this resistance to be right here. It was, okay. It dropped back down. It created a, it created a resistance here, reversed. Therefore, once it goes through a recycle, all of this is something to consider when you have a failed breakout. A failed breakout can come back the very next day and rally. True, very true. But generally, as a general rule, when a breakout level fails, it goes into a recycling consolidation again. The bears won that round, okay? accept it. And that's what I tried to tell people on RIVN early. You know, the stock's sitting at 1592, but I'm like, you know, on the retest, it went back up, but I'm like, this is not looking good. There's not continuation occurring, and if there's not continuation, I was watching the volume. The volume was subsiding. Why is the volume subsiding if this is going to push higher and break the bear's back? So all of those factors came into play to me tweeting that, you know, small traders that are building their accounts, exit the trade. You would have made great money. I did a lot of things that I'll discuss in the advanced seminar on that trade that were absolutely paid huge dividends. I made money on the trade dropping today. I actually wanted it to fail completely after it failed. Sorry about that, but I did. And you will too once you have these in place. But you see those lines and you notice every time it tries to come back and break through, that's block orders from preventing it from doing so. And it dropped down to the next level. And then it rose up a little, and then it hit this resistance this third time. Well, you hear me say a lot of times, third time's the charm. So many times, the third try is the right try. The third, write that down on this chart, on your notes, whatever, say whatever slide this is, big C daily candles. The third try is the magic try many, many times. And so that all factors in as well to whether you bought a stock or not, right? But this third attempt, you know, I added to my shares, and I had a number of shares, but I added to those. And so I don't think I have the big C slide after that. I do not. So let me do this. Now I need to escape out of that. I don't want to leave them. So get me out of that. Where do I go back to escape just to be able to see this screen? My home screen. This is on my PC.
Go over here and hit escape on this one.
Oh, escape. Okay. And then I can start the.
Yes.
Okay. Big C. People will freak out every time I share these. Oh, we don't have it. All this happened, by the way, after IPO. Okay. You could see the spike here to 170. This spike here is the one that occurred after that initial IPO major strike. And if you take the low and you take the high and you divide it by 2, guess where Model T is, right? That's your Model T somewhere in here. And then it started its descent in this candle, but then it jumped all the way back up above 100. All the previous slides I just shared you happened within that 30-day period. It dropped from those highs all the way back down to the 60s. It reversed back up and went over $100. And we were able to exit that trade. That's that setup that we had, okay? There's that explosion. Now, you can see that it had a trend ever since then. Here's the monthly view. That's an ugly monthly trend chart. I imagine if we go to the weekly trend chart and we back it out, that's not a very good looking weekly trend chart. And if I go to the daily trend chart, that's not a very good daily chart. But you notice it's flattened out here, right? And if you notice, if you go back and again, type in Big C in Twitter, at Old Army 1, and you will see me start talking about buying Big C again and leaks in Big C right in this area. And then it jumped up here. It didn't make it to this test, but we were selling a percentage of our leaps there, and it dropped all the way back down, retested. It'll do that a lot when stocks are reversing from a long trend. Sometimes they might just run off from you, but a lot of times they'll try, fail, they'll come back and retest the low, and then they'll start a build. And that's what we have going right now in Big C. So if I get big right now, pun intended, I would take this low and I would take this high, I would divide it by 2, and that's Model T. And if the markets are going to have a consolidation pullback, that's where I would be looking to enter Big C for the first time. Because now the trend has reversed because it has broken this right here. You have a trend reversal. And if you notice now, our trend lines are moving upward. Okay, they converged. Now they're moving upward. They're not in the right sequence. They're not in the right order. Doesn't matter. The more they get in the right order, the higher that stock's going to be, obviously, and the more confidence that you're going to have in this trade in terms of a long position. But that is how you see the dynamics of a change of structure that occurred. If you didn't see the change of structure flattening out here, you certainly would have seen it right here. That you can't miss this change of structure. It's gone from this long downtrend where nothing could ever happen to it. And then here's your next goal level right here. Okay, if it keeps on going up and it doesn't come back to test Model T, my prediction would be that it's going to make it all the way up to complete a full cup. I call that a full cup completion is what will occur with this stock. And if you had bought back in here, that full cup almost gets you net free. And you can do some strategies to be net free. And again, that's advanced tactics. But right now, that's a great one. And let me show you a sign. I've got it on the slides, but I'll just go to it here. Make this big. Okay, here's the San daily. Same thing. And by the way, we made the same ride with the San. You guys will remember. We were buying and it went so ballistic. It was crazy. But it's had a hard time. I know why this is in the wrong sequence. I'm not on my IBKR. I'm on another family member's. Sorry. It's okay. Let's check the trades. Anyway, this has come all the way down. You notice it flattened out for a long period of time. You see this huge spike here, but what happens on stocks that the bears have completely won, meaning they have managed to completely beat down a stock, if it's a good company, at some point, what they start doing is they'll be the ones that are actually buying. They start buying back their shorts, and it creates this momentary move up in the price, and it immediately starts back down. And if there is no buyers out there, the shorts aren't going to help you out beyond their covering. So there's no squeeze involved. The stock's going to continue to go down. Now, they had a risk, just like stocks going up. They had a predetermined area that they were going to start covering their shorts. That's where these massive bounces can occur. But then if there's no buying interest, because we're right in the heat of the bear market, right, bottoming out, then it's going to continue down. And that's what it did. And then there was this huge volume spike here. Same thing. And then here's another one right here that took it up. But the difference this time is you had this flat. You see how it's flattened out. It's not curving down. You have this long period of going flat here, horizontally, as it were. And I call those two candles, because it happens a whole lot. And I know some of you in the forum are going, why aren't you calling it what it is? It's called a goalpost move. I call it a goalpost move. And when you see a goalpost move, meaning that the left candle, massive candle, you get a massive candle on the right side, that creates what I call is a goalpost. And you can start thinking to yourself, I've crossed the goal line of a bottom, because that's probably what's occurring. And that is exactly what has occurred with Asan. We went from the low of 10 now to $25. So we were buying back in there. We had spotted this through this methodology that I'm giving you on a macro trend right now. We had spotted the sideways movement. We wanted to be long in this stock, so we were buying. Once it broke the previous, I can't point to it, I'll mess you guys up, but once it broke the next low and went higher, the reversal was taking place. and now it's reversed all the way up to 25. I see this as a $75 stock, just so you know. When, I can't answer that. I do think that there's going to be a major move up in it, probably of $8 to $10 at some earnings report in the future. But it is a really good stock. Its Model T right now would be what? Well, you have kind of a short one here from this candle. I guess you could say this one, this wick, because it didn't get below that again. So this low here would be the low, and then you have this high here. And you would take those two numbers, divide by 2, and that's going to bring you somewhere in here. That would be your Model T. So you could start making strategies at $23 area. Would be a place for initial entries into a SON. Again, with your eye on the macro market. If you see the macro market is continuing downward, then the Model T that only serves as a guide of where it was going to reach. Probably it did. It could continue downward. It generally will bounce off of it, and it's magical how many times that'll happen. In fact, if you pull up a Model T on the chart, you'll see that it'll go down to that, and then it'll move right back up for a bounce. Those that are in a bullish trend, it'll continue up. Those that were not in a bull trend, it'll break through it, and it'll start going down. So you want to be paying attention to the macro environment as well. All right, let's go back. That is extremely key. Slideshow from current slide, and then display settings. No, do I want to just do it this way? Swap presenter view?
Yep. There you go.
All right, that's as full screen as I'm going to give you.
Yep.
Okay. All right, so now this is the next chart where I'm showing you a daily again of that, but I think we've exhausted that. And by the way, you notice it's the same lines that we had on the big move up of resistance. Okay, next thing are gaps. Gaps are one of the most magical things in the stock market. We have been monitoring, almost agonizing over the last upside gap on SPY for several, like probably 6, 7, 8 weeks. And it finally filled, and it's right here. That is the last gap on the, I think that was it. Let's see. Yeah, I think that's it. But that was the last gap that needed to be filled right here. And from the downtrend, that was the last gap on an uptrend that needed to be filled. It filled it. Generally, when it fills it, you have a pullback that'll occur. And if I look at all of these gaps here, you have this major gap here, this major gap here. Tell me if that's blurring you guys out too much. Yes, the EMA, yes, it shows an EMA entry, yes. Yes, your 8-day crossed over, yes, at the end of May. That's probably for the previous chart, and yes is the answer to that. We'll get into that very specifically because we talk a lot about trade execution in the advanced seminar, about you're putting your money in the market. What exactly am I doing? So you see these two gaps, big gaps down. Well, that obviously tells you people are just bailing on the stock. And so it continued down all the way down to here. Then it jumped back up. It created a gap right here. And I don't think that cleaned up that gap. It got close, but it didn't clean up that gap. It didn't get down to clean it up. It didn't fill it. But when it jumped back up, you'll notice it filled this gap. And then it went up a little bit, but then it fell all the way back down, came back up. All this is just chatter. Doesn't really matter. This gap is now formed. But what you're looking for is when trend begins to move upward again, I'm looking to my left. When trend is going down, I'm looking to my right. I say to my right, I'm looking at the trend that had been going up, and I'm looking for gaps to fill on the downside, okay? And we have several of them on the downside. We have no gaps now left on the upside of SPY, and I hate that. Because if you notice, every single one of these gaps was filled, 100% of them. When they get filled is on these reversals. And so once you get reversals out, generally these gaps are going to get filled on the reversal. Okay. Any gaps that would have been created here would have gotten cleaned up on the Model T move. By the way, yes, take a look at the Model T moves on this. From here to here, Model T. Okay. From this one here to here did not reach Model T. This one down here to down up there, back down, did reach Model T. This one, if I took the move from here to the last low, it reached Model T, and then it hung there for a while, trying to determine what's going to happen, and it broke back out above that Model T number. That's a very bullish sign when that occurs, but it filled the gap on that move. So these gaps, they're always going to get filled. That's the message. They're always going to get filled. And if you notice my tweets that I'm giving, like I can't remember, HD, I think was one of them. I'm trying to think of some of the, OKTA. OKTA has a big gap that needs to be filled. All of those gaps are what you start looking for once a stock breaks out. You get very confident in the fact that, number one, take the midline between the breakout and the gap fill number. So let's say the gap, it broke out at $100 and the gap fill is at 120. Take 50% of that, 110, almost guaranteed, unless someone does something in the government or there's a virus released on humanity. You can pretty much count that $10 is going to occur. Well, that would be a trim. So you've made great, imagine the money you make in a call option with a $10 move. And then you stay with runners looking for a gap fill, the full $20. Okay. So that these gaps always get filled. Here is Neo. And again, you've seen me. I called that Neo, I called the China stocks at bottom. I just said, I made the statement. I've been tweeting it ad nauseum. I know you're sick of hearing me say it. I said China stocks bottomed. I think I said that, I don't know, 2 weeks ago first, and then last week again. I said they bottomed. Here's what we're looking at. Maybe I should pull up the other chart and show you the long trend down. Neo was another one of our forum mass accumulation trades. We bought it like crazy under $7 or $5, all the way down to 3 or 2, I believe. And then it jumped all the way up into the 60s. But then it with all of the other things in the world, it came back down. Now it went all the way down to that $7 mark. And you see these last gaps that were created right here, and you had this gap right here. Well, they came out with their earnings, and on their earnings day, you're not sure what I mean by the gap was. Okay, well, here we go. Let me get out of here. Escape. Let me go. This is so important, guys. We gotta get this. Okay, let's go to Okta, because no one can miss Okta. You can't miss seeing what the Okta gap looks like. All right, here's Okta. Now, you got to go in here, chart parameters. I have show data outside of regular trading hours. That's giving me everything, pre-market trades and everything. Well, get rid of that and apply it, and suddenly look at this. Okay, so you had the stock trading in the 90s. It broke down, and there were trades that occurred in the aftermarket hours. That's what you see. If I go to edit, again, chart parameters, and I want to see what those look like. Okay, that's what it looked like. Massive selling going off, created this huge gap. Okay, so edit, let me get rid of that again so you can see the gap. Chart parameters, boom, boom. Okay, so what you have now is Okta has this massive gap right here between a low on this day of 88.85, okay, and the low or the breakout number here. First, you'd have a Model T Calculate a Model T, by the way, from the top of this day, from the bottom of this day. What's the lowest number here, highest number here, divide by 2. It's heading that way right now. Okay, Model T is going to get hit. It's amazing, but it will. And so once that Model T is filled, that's probably $10 of the trade right there. But you're looking for this gap to eventually get filled on OKTA. They actually had good earnings, by the way. Go back and look at their recent earnings. They beat in all respects, but the CEO made a nebulous comment that was frankly uncalled for. If I was a shareholder of Okta, I would have been pretty upset at the way he said it because it really didn't have anything to do with forward flow as much as the number of accounts that they had. Well, you had that number of accounts that created the beat earnings. Why would we be concerned that they're lower than you wanted them to be? It made absolutely no sense. And by the way, that's another thing that it's not in this seminar. I listen to the releases. I listen to the earnings calls. Now, some of you may not want to do all of that, and that's fine. That's what OA1 DTS is for. Because I'm going to be knowledgeable. I'm not saying that they're your own trades, but I'm telling you when I call a trade, it's because I have studied it. I listen in. I'll even talk to executives within the company if I'm going to be making large trades in it. I know what they're thinking and doing, and sometimes I'll talk to the truck driver because the truck driver doesn't know not to say things to me. So the CEOs have that C-speak, and I'm one of them, so I know how that goes. But yeah, don't laugh over there. I saw that wry smile. So anyway, this is a huge gap. Now, do you see it? All right, so you got it. Let's go back to the presentation. Let's just draw it up on here. Big C. No, Neo was what we were looking at. Okay, again. Okay, now they're not as big because we're dealing with a under $10 stock. They can be, but here is the gap right here. So you got a gap right here. You got this gap. See this gap right here? So there's the low closing. It gapped down. It went down. Now that gap got filled right here. Here's that gap. The low one here got filled here. Notice that after a gap fill occurs, there is a pretty good chance of a pullback, by the way. Put that in your notes. Once a gap gets filled, there is a probability of at least a short-term pullback, which is why you exit trades on gap fills. You wanted the gap fill, you got the gap fill. Institutions were trading to the gap fill. There's a psychology to the gap fill, just like the big round numbers. There's a psychology. But there's also that part of it is they tend to back off once they fill. And so here is the next gap. So we have this gap up here, okay, 944 is that gap, by the way. And then you have this gap here, which was 878, I believe. Hold it, we should be able to see it. Low was 859. So there's your gap fill at 859. Well, here was their earnings day. And lo and behold, the stock jumped up and filled the gap and made it all the way up to this resistance level. Look at that. Is that not incredible? You have a gap fill, you have a overrun of that with the bulls, knowing the stock. The big institutions know they're buying it. They just don't know who all the other institutions are in bed with them. And so they think this is it, that it's going. But what happened is there was some either major short seller that wanted to kill that rally and allow them to trade and get out of the position. And they could do it in a number of ways. They could squeeze it all the way back down, which is what they did, which got all kinds of people frustrated, stopping out. Oh, this is the disastrous stock, blah, blah, blah. And what they did is, yeah, they're short the shares, but you know what they did is they go out into the market and they buy calls. They buy thousands of calls equivalent to their position. Now they're at no risk. As they close their trades, they're helping their call position. and the natural momentum is going to continue that institutional buying, and they don't even have to do anything. They exited their shorts through this period here, and now they're enjoying their calls gains going on upward. Okay, so I'm giving you some advanced stuff there. We'll get into that, and that is understanding how institutions work. They do not like me, but that's okay. We get in the line with institutions is where we want to trade. This gap gets filled then, right? And you noticed on Twitter, I said I sold 100 calls when it was flashing above. When it was flashing above the, I can't talk right now. If you're having an issue, I'm sorry. We'll have to. It's being recorded. So this right here, it flashed above, and I tweeted, I am selling 100 of my leap calls. I had I had $10 leap calls on NEO. They had gone up. I can't remember 80%. They moved up 80%. I had more than 100. Some of you know how many. I sold 100 of those. I got so lucky, as you guys know, that day that were following me, because it dropped all the way back down and allowed me to buy those 100 calls back at the original entry. Okay, when the good Lord grants you that kind of mercy, accept it. Yeah, text me. Don't if this is one of you guys, text me. Don't leave me a voicemail. Check the text. Make sure it's not. If it's other business, just tell them sorry. All right, so it dropped all the way down. Then it started moving back up. And guess what? Here's this gap, what was it? 944 is the low. And you got to look to your left on the bottom down there in IBKR, right below the legend of the EMAs is this particular candle. And it's showing us that it had a low of 944. It had a high of 981 and it closed at 947. That made it a red candle. Next morning, it opened well, it didn't give me my opening on this particular legend. But the high was 920, didn't fill the gap. Dropped back down, okay, and it created another gap. And we know that one already got filled. So we're looking after this one fills. The next thing your eyes, again, you're looking to the left. The stock is reversed in our minds. In fact, once it topped this number here, it's a confirmed reversal. The stock is now trending upward. Here are your lines. We're trending upward. Okay, so we're going with this. And the next thing our eyes do is move to the left and say 945. I tweeted that out. The next gap to fill is 944. It did it this day. And it pulled back a little bit, but then it rallied right back up and finished at what? Closed at 979. So it got the gap filled. It came back down to 905, and then it closed all the way up at 979. The next day, guess what? It made Model T. Okay, I'm looking on a daily chart, not a minute chart, but here is your high. If I take the high-low of this day, I've got a Model T number. And if I take the high of this day and down to the breakout, which would have been here, that becomes the secondary Model T. Okay, but this hit Model T from the previous day. And look what it did. It flashed below it, and then it held at 940, which is just below the flash fill, just below our last fill of a gap. Isn't that interesting? Okay, and that's where we are right now. So it got today up above 1021. This is a daily chart. If I look at a weekly chart, the weekly chart's going to start showing me things. Look at this buying. Okay, that is not you and me. We do not make markets move. Okay, we are simply along for the ride, as it were. And we just want, and the institutions hate having us join them from the lows. Because as I've tweeted so many times, markets love excess. And once they make a decision to move a stock hard upward, it is going to be to excess. Once they decided to move the macro markets into a bull phase, people looking for, oh, bear market's coming. Oh, the bear. Okay, it's okay to have those scenarios accounted for. And there are pullbacks that occur along the way, but guess what? You're along for an institutional ride, and your thought in your mind is big money loves excess. They're not trading for nickels, dimes, and dollars. They are trading for hundreds and hundreds of millions and billions of dollars, and they trade to excess. And when we see the SPY chart, you'll see exactly what that looks like. But look at this money piling in to NEO. If I go to a sign, here's the money is coming in, not as quick and much. It did it back here when it first broke out. Okay, so you had its clear. Okay, here's its challenge test, and it drew back again to Model T of this move. Okay, and then it's bang, it's gone up, and now we're sitting up here at 25. If I look at BABA, that was the three that I said you should be buying. Okay, if I look at BABA, same thing. I mean, the China stocks all did the same thing. They had false breakouts. They had sideways movement. By the way, if you had bought anywhere in here, you're not completely disappointed watching this sideways action occur, because you've got a change of structure that's occurred. You had a long downtrend, and then you have now a change of structure with this movement. And this, by the way, I don't have it. This is for advanced. This is called a Darvas box. And when a stock moves sideways and you get these tops and bottoms, and it comes down and it tries it, it broke through, but it quickly came back. This is a Darvas box. It's used in multiple ways. Once it breaks through that, it's a good indicator that you've got a hard uptrend occurring. When you see the bottom not making the bottom range, it made the top range here, it made the top range, so the buying interest is there, but note here, it didn't make it back to the bottom of the box. That's an indication that the buyers are coming in, okay? And right here, that tells you that those buyers are still these buyers. They have a whole bunch of shares that they're buying, and it didn't ever make it back to that structure, okay? So that's your change of structure. This is a weekly chart. I know maybe it looks more, but look, here's the daily, okay? So here's the daily chart. So on the daily chart, this is the week that they've reversed. Be buying, buy leaps, buy shares, buy whatever you want to buy. And so BABA has gone up now from the 80 to the 92, hit whatever the high it was today. So it also, I think, created a gap here. High 90.12, low, yep, that's a little gap right here, 90.60. So 90.12 would be something you would have in your log. And what I do is I come up here to this alert tab, okay? And I come down here and I just click right there. And now I can go up and make it whatever I want it to be. 90, I make it 90.15, knowing the gap fill is 90.12. I'll activate that. And now if 90.15 gets hit, it sounds like the police are knocking down the doors in the trading room. So that alert goes off, and it lets me then go look and see what's happening. I look at the macro market. I make a decision. Am I fine with the position that I have right now? Do I want to re-enter and make another trade? I can make those decisions. And so you could set these alerts. I would put one right here right now. You notice, you see this structure right over here? You've got this support that was trying to be made here until it broke down. Well, it coincides pretty close to right here. That's telling you that when this gets broken, so I would probably come up to here and make that the alert. Okay, so, and by the way, if it hits 99, I'll guarantee 100, right? Big magnet move, I call it. Anytime there's a big round number on a stock moving upward, it always will take out the big round number. I think the only time that it didn't was this past year, where it trapped all of the people waiting for a drop to occur. And it stopped just short of that. And I bet people were, including me, were very upset at that. But you see this right here, this resistance on this right here, but you see the basing that it was attempted. I imagine you're going to see this end up trying to base. After it does whatever it does, it's going to come back up and will base through this area. And then this next area is what I would be looking for, which is going to get you $100. But I'll leave those activated. That's how you set alarms. It's very easy to set alerts on IBKR. Okay, so those are the three China stocks. Let's go back to the presentation. Sorry, I'm jumping back and forth, but that's just how we have to do it. From current slide, display. There we go. Okay, we're back. Here's Netflix. Look at this big old gap on Netflix. Okay. And so you had this gap here, you had this gap here. Well, that gap got filled, right? On this move off the bottom. If you were buying Netflix in here, why in the world would you sell Netflix anywhere here? I mean, trim, yes. Understand trim. You got a Model T probably from there to there, somewhere right in this area. But why would you do that until this gap fills? Now the gap got created right here to the upside. I don't know if everyone can see that. It's small. It got cleaned up right here. Markets are so efficient. And I think that the reason that they're so efficient is that the computers, algorithms are making the trades. And I think that I actually know that, which is how we trade. I did the Neo thing. I want to be Neo. I want to look inside and be the machine with the algorithms and that are trading in the markets. So that got cleaned up. That gap got cleaned up. Here's a gap right here. It got cleaned up right here. Okay. It paused for a second after cleaning it up, but then it continued on down with the macro market. Then there's no gap. I think that might be a small one. I don't think so though. All the gaps cleaned up. Here's a small one here that's existing right now. So that would be a level. And there's one right here, little bitty one right here. If you notice, I have my alerts set for if we break down below that number, I can't read it right now, but 330 something, you would have all of these in your watch list. I provide all of these. You would have them because when that alert goes off, I'm thinking puts. I'm thinking short. If this one goes off up here, then I'm thinking long, and because I've got a gap right up here that's waiting to be filled, right? So I've got gaps, two small ones here, and I've got a big one here to be filled. It may have been filled. I don't even know. I mean, we're not looking at a live. What did Netflix close at yesterday or today? When was this chart done? This was from 6-8. Oh, I bet Netflix gap filled maybe. Did it fill up to, is it over 500? If Netflix is over 500, this gap's already filled. So success for you guys on that. Okay. The next thing is a double bottom. This pattern here comes generally after a long downtrend. This is Guild. You guys in the forum will remember Guild. This was in December. And what I did in December is when we were down here retesting this, I said, let's start our 2020, whatever the year was. I'm getting old. Whatever the year, it was last year maybe. But I said, let's start off our 2021 with a win. Let's buy calls out to March. I believe they were super cheap. They weren't expensive to buy. So we bought I don't remember, but we bought calls somewhere in between in the Model T range, somewhere in here. I think $60 calls. I think we took the Model T, in fact, and made that the strike. So we bought those, and if you look at Guild, you'll see that it broke upward and it made a very good trade at the start of the next year, and before those expired, and we made a really good ROI on that. And here's another double bottom with Uber that you have, and it's interesting. It's split. This attempt was at a bottom here. It was pretty good volume on the 1 minute. It dropped down to here. This is an intraday double bottom. So unlike the previous one, this is on a daily. All of these patterns, by the way, they happen intraday. They happen on the weekly charts. You can find them. They'll happen on the daily. Here's the thing. As a trader, think of it as trying to learn to hit a baseball. If I come in and I start pitching 100-mile-an-hour fastball, big league fastballs to you, that's day trading. Okay, the patterns come fast and furious. You'll fool yourself into seeing things that simply don't exist, and so you have got to get your eye discipline up to speed. Go to the weekly, go to the daily, and then drop down from the daily to the 4-hour chart. The 4-hour chart is a wonderful indicator showing the short-term trend probability on a 4-hour chart. So pull up a 4-hour chart and start making your trades that you're making based on daily and the 4-hour chart. And then, yes, look at your intraday for refining your entry zone. So if you have a number, if I'm down in here and I want to see something, close into this range for my buy, if I missed this, if I didn't buy on the breakout here and I'm willing to sit through a retest, my stop is going to be here at the new low. So I wait, and I expected it to come down and retest. It didn't. It reversed back up, and you can see right through here, once that gets broken, pretty good indicator that we're going to move on up, and we did. And that was a very good reversal day for Uber. I think I just heard a disconnect.
Yeah, your IBKR.
Oh, but not these guys?
As far as I know, no.
My IBKR disconnected. I hope that didn't impact you out there. Again, you'll have the video. Pivots. You hear me all the time talking in real time. Anytime I'm on and I'm talking things real time, I say, here's a pivot attempt. Well, this is what a pivot attempt looks like. And I didn't go back far enough on this one, but this right here is something I'll talk to you about in just a moment. They're still on. Thank you, guys. This was trending down from up here. And then you notice it flattened out. Again, that same thing I showed you on the China stocks is occurring on the intraday, on the minute chart. What I'll do when I see this is I'll go back to the 4-hour chart, and I'm going to look and see if we had any indicators on the 4-hour chart. Anytime you say that I think this is going to be successful on the pivot, it's because of the 4-hour chart. And again, that's advanced tactics. We'll get to that in that course. It's very, very sophisticated in terms of how you have to do it. But anyway, you notice here that we flattened out and we made that low again. And I was tweeting, this is a pivot attempt, guys. And so it moved back up. And then this is where I suggested a trade to enter with a stop. If this is lost, exit. That's a pretty tight area, guys, right? I mean, if you day trade, you can limit your losses pretty good by following that discipline, right? You can have the opportunity for what occurred, and that is it moved and it actually came all the way up and it broke. This is called VWAP, and I will tell you what it is. I'll get more into it in the sophisticated, like we're all sophisticated, in the advanced trading course, but it did make it all the way back up and actually rallied. So from your trade entry of a pivot that is a successful pivot, okay, and successful in my book would be once it breaks above this, okay, my line here, I drew my line, I got my left, I got my right, and it broke it right here. So now I feel very good about the trade, okay? Sometimes I'll trim, depends on how many, if I do calls, how many calls I bought. If I did shares, how many shares I bought. I might trim some here just in case and give myself a little bit more downside room for a retest. But I didn't that day because the markets actually, you could see the macro markets were all showing some strength. And so VWAP is simply it's a volume weighted average of all the trades that occur within 1 day period. It resets every single day, and it shows you where the mass of all volume occurs. So if you took all of the volume backwards for the day in SPY, okay, and you divide it by the number of candles, it will give you a weighted average of where that volume of money was coming in. Well, what does that tell me? in simplest terms, it says that a lot of big dollars were being spent buying 427.70 area and above, because it actually drawled down during the last of this. Okay, so it was up here at the 428 right through here. It moves based on the weighting average of what's occurring in real time against the whole day. So by the time it pivots, we're sitting here at 427.72. I had a trim trade. Again, I sent this out. I said, here's where I'm going to trim my trade, is right here. But I expect it to hit VWAP. Now, I don't know if I have the next slide. You notice it hung in here, okay? And right here was the trim. I'm now looking at daily. Yeah, the trim, it now breaks above VWAP and it continued up. I think that's a different trade. That's a different trade. Same principle though, right? Okay, same principle. Only one difference I'll talk about in a second. But you trim your trade, that's a really good gain, okay, that you've gotten from where you entered the trade, especially if you did call options. But then you exit the trade or leave just a runner when you reach VWAP, because VWAP, as we'll see in a moment, VWAP can serve as a rejection point, especially if you pull up the VWAP from today. By the way, once it broke, it kept trying to rally back up and it kept bouncing off VWAP, bouncing off VWAP. It could not break above it. The bears were in control at that time. It gave you an indication of that. And so you have this downtrend though, but then it flattened out. Okay, you see it's flattening out here, came back up, and this move right here, I call this, again, a stupid name. It's a Trixie. It broke below the previous. You see this is actually a 1 minute. If you took a 5 minute bar, it would be all of these in one bar going like this. Okay, those 5 candles, okay, would have been consolidated into one bar, and all of these would be one bar. You'd only have about 5 bars sitting here. But at the end of that 5th bar, you had a breakdown below. It quickly jumped back above, and that's why you have your line here. You're going to stick with the trade if you entered here. Otherwise, you wait until you see this break here. Now you enter, and you have your stop loss right here. But now is when I entered a trade. And again, this was all real time. You'd be able to do this right along with me. And then it came up and it was so powerful, this candle. I was like, just wait for VWAP to get broken. It's going to break it. It's going to test it, whether it fails or not, I don't know. But it's going to break it. Even up here, it broke it here. It broke it here. Wait for it to break through. And you might get lucky. We got lucky. The candle was so strong. It took it such a ways up that we got out, and then we just had our runners, and we watched it. It tested VWAP, right? Look at that. And here's another thing to write in your notes. Once resistance is broken, it becomes support. Once resistance gets broken on any of your technicals that you're using, once it gets broken, what was resistance generally is going to become support. So as you see here, every time now it tried to break down below VWAP and it crossed it here, it was rejected with a buy. Okay, so isn't that amazing? Can you make money with that? I think you can make money with that. So when it breaks that, it becomes support. Same thing on the downside. So this one here, this is a different one. This is a different pattern that I just want to share with you, and that is it's the same thing of a double bottom. You had your bottom here, okay, your low, and you notice, look at this sell-off that occurred. I look for these accelerated sell-offs as entry opportunities. I think that it's leading me into an entry. Now I'm just waiting for what's that going to look like to me, and it's going to be different things. This one, it hit a new low. I typically think after an attempt to go upward like this in line with here, I tend to think if it reaches down into a new low, they're trying to shake people out. That's just me personally. I think they're trying. So I don't know if I entered the trade there or not, but if I did, I can't remember all my trades like that. This is from a ways 531. But it came up to here. It came back down. Then I saw this pattern. You see this stair step pattern down? Very, very designed. That is an algorithm at work, folks. That is not created by men trading or women trading. Okay. This is an algorithm that is running. When you see a stair step into the low with an algorithm create, and that's how you spot it, is you'll see it stair stepping, and it looks totally different than a squeeze looks. It is so obvious to see on a chart when it's happening. That, I mean, look at it. It's a stair step down. The algorithms are at work. Well, once it reached that double bottom here, look what happened. Look at these wicks. You can see there is a block buyer buying every single time. So that person that was buying there, or institution, it's not a person, that institution buying here they're loading up. They are loading up. And so I'm buying with them. And I'm gonna wait. I'll give it probably, let's see, that was at 14.25. I might have given it to 15.90, just in case it flashed below 416. But otherwise, I believe that these wicks are going to hold, because that's a large group block order that's going on. Well, sure enough, it breaks out of that for confirmation, and then it starts its journey upwards. And then now this is not is defined as this, but this is a program that's being run. What that program is showing you is a squeeze is underway. Okay, so they set the marks. Okay, there's predefined marks. You software people probably know this better than I do. And they have predefined, and it has everything built into it. It has, don't go just straight with your tops of candles and bottom of candles. Make sure you throw on the 3 minute, you're going to violate it so that it shakes people out. But it will always have a continuation. You see this shakeout here? That's predefined. That is not, look at the volume. There's nothing happening there different on the minute volume than what was occurring in the minutes before here. And so that is your algorithm running to shake. Okay, sometimes it'll reach Model T. It didn't. And another thing to put in your notes, when you would have been looking for Model T from here, because now you have a break of the structure, you would have been looking for Model T, which is right around this basing right here, from the top of this to the bottom of this. When it doesn't reach it, when it can't reach Model T, that's a sign of strength. Make that in your notes. I mean, Model T, you should be trading Model T like it's the golden goose, because it is. But anyway, the algorithms didn't want it to. It didn't make it, so it didn't achieve Model T. Now it did what from here, this top to here, naturally, yes, it did, and that was when the pause. Again, the algorithms are doing that. That's not traders creating Model T pauses. That's the algorithms. Why? Because if there are advanced traders out there, they may be thinking that's the end of the road. Model T was achieved. That's not a bad trade. I'm going to get out, and they take their profits and they're gone. The algorithm, however, has, they have the trend, and the squeeze continues. And this thing, it shot. That was one of the big moves on the day. I think it's a day that we played the closing, expiring SPY calls. Let's see. This is a 1 minute. This is a reverse head and shoulder pattern. Yeah, the shakeout happened at Model T. Again, that is programs running that. That's not some guy sitting at Barclay going, okay, I'm going to start selling here and create. No, that is computer programs running an algorithm. That is what's happening. And it's a shakeout move. That's what it's intended to do. Man cannot create those perfect structures that you're seeing on the charts. They just can't. Okay, here is a reverse head and shoulder. You got the head right here. You've got this acceleration. Okay, it broke trend. It was sideways trend. Generally, when a sideways trend gets broken, you go with it. So the shorters were piling in right here on that minute chart, and boy, you can see the volume ticked up because they were just hey, we got a break of structure. So they're going for it. They get a bounce here. It doesn't reach Model T. That was my clue that day that there is still sellers out there because it didn't reach Model T. The algorithm it said we want out of this. All we want to do is to create a momentary buying into this to give us a better out. And down it went. And it accelerated again then, okay, way down. And then you had this structure right here. This is a beautiful structure, and that is the red candle. This is just what we saw when I showed you NEO on its earnings day. It shot up on this candle, right, on NEO, but it came all the way back down. Then once you see this green candle, you go with it. You go with it. That is a reversal that is occurring, and you want to be in that stock at that moment. And so it reversed and it trended up, and it's turned into a very good trade for everyone. Okay, it came back to Model T, by the way. I think I have a sequence here. Yes. Okay. Head and shoulders. Okay, it's reversed. Here's the head. You have a left shoulder here. Actually, I would put it up here. A right shoulder here. It hit up at the right shoulder. Let's go to the next sequence. Okay, it came back down to the full range Model T right here. Okay, if you took the high here and the low here, here is Model T, which is, by the way, if you see the macro markets are trending up and you see all the stocks are moving upward, you buy at the Model T level. If you're late to the entry and you were away and you come back and you see Model T come, then off you go, you're buying it, and then it shot up. That's not the sequence chart. I'm sorry, guys. I don't have I'll put a sequence chart in that shows you what occurred after the Model T with that stock. That's the same Model T. Oh, there it is. Okay, so here was the Model T, okay, and then it shot back up and it rallied, okay. That's a pretty good move. So if you had entered, here's that candle, right? Here's the candle that it tried to reverse on a green candle. It failed, but then the very next candle was an engulfing candle, meaning it took all of this candle out. That is your buy. That is a buy signal, and you enter at that point, okay? Then you just stay with the trade. You could trim along the way to give yourself some confidence, but that was from what? If you got in even at the top of the candle, 374.25 or so, and here you are up here at 376.38. So you made a $2 plus profit on a day trade, on an intraday trade. Here were the changes of structure on a really macro chart. Okay, so this is all the way back to April of 2019. You can see the stock market is going in a wonderful trend.
2 minutes to 5.
To what?
2 minutes to 5.
No way. No way. Okay. I'm going to finish the video so that you have it. Everyone, I'm good with going over. Yeah, I'm good. We have an hour. We're going to finish the video. If you have to drop off, drop off. You'll be able to access the video. Let's keep on going.
It'll be recorded.
Yeah, it'll be recorded. Off we go. I'm sorry, guys, but these are important things. I tried to time this, but I threw in a lot of charts that are fresh ones. And so even if we have to have another seminar to capture things beyond this next 40, I'm gonna cut it off at 45 more minutes. We need 15 minutes to eat before a meeting. Then I'll have another seminar. We'll record it. You'll have the content. You will have the beginner basics. Okay, I promise you. You will have everything. This trend structure, you can see the break of structure that occurred right here. You would be taking. What are you laughing at? I could do this all day. You see the trend structure, okay? You got your trend. These are crude, but that trend line gets broken. I mean, your mother could see this trend line. No offense to moms. I have mothers on this video, but my mother couldn't. So for my mom, even she could spot this. And she would say, what are you doing in the market, right? So it broke down through that. You better be making things happen. You don't sit back and say, let's see if it occurs. No, that is a huge candle. You are making moves. You empty your SEP account. I mean, that's me. I'm out. I am out. And you let the markets dictate when that move is going to reverse. Okay. And you see here, this outside bar, you have a lower low that occurred intraday. That's a shake move. It got all those stops. Oh, this is just continuing to collapse. They love that algorithm. And then it came back and it created an engulfing candle from this day and went outside of it. Well, that is a reversal candle. It's green. It's a reversal candle. You are putting money to work, maybe not all of it, but you're putting a good chunk of money back in, waiting to make sure that you're correct. Once you see that you're correct, you put the rest of your money going in. And then we got back on a trend that was absolutely fabulous. You had another change of structure that occurred. And once that change of structure occurred, same thing. You let it play out. Is this a correction? That could have just been a correction, and it could go back up. I'm not willing to risk it. I am out. I will trade calls like I'm doing right now because we've run so far. You guys know I was buying shares at the lows, right? I told you guys we pivoted. I'm buying shares. When we get to new highs up here that have rallied as hard as they have, I'll trade call options, but I'm not buying shares. Not at these prices. I'm not going to do it. I will make the money. If they want to keep squeezing, we'll make great. We're making what, 100% on the. We were, I think, if we take for the last 2 weeks, we're 13 of 16 trades. We had one failed trade. We had 2 trades that are still active, that are trimmed, but they're still active. We had 13 successful trades that went anywhere from 100 to 250%. The McDonald's trade went up to 700%. Or even more than that on the last runner, I think we'll show that was 900%. So yeah, we can make more than the guys holding the shares if they're going to squeeze the market with calls, because the moves are so huge that the call premiums are going to spike on that intrinsic value. But anyway, you had these change of structure. Here's the one we're currently in. We're currently in an uptrend. We've got a change of structure that has occurred. This is what we're trading right now. Here is the top line up here at 4,500. You guys in the forum know that I said, hey, this thing could run to 4,500. I've been saying that since back here. Why? Because this line tells me that that is a potential top up here at 4,500. Meanwhile, you look on Twitter, everywhere from back here, they've been saying this has got to be the top. This is the top. This is the top. This is the top. This is the top. And right now they're telling you this is the top. I'm telling you, don't believe them. Where are we? We're mid-channel. We're basically playing a Model T game up the marketplace. Most of the gains have been on the lower side of a Model T move, right? I'm right in the middle of this. That's kind of its own Model T. We're on the lower side of that. We haven't even broken through to the upper side. If that happens, look out. You're going to see, I call it the crazy stupid phase, because prices just get crazy stupid. You'll see $100 stocks trading at 180. It just gets crazy when that happens. So that would be right now where I would say our top would be. That's where I would target. That's where I would go from having a hedge strategy to starting to take trades for a sell down. Right now, all I'm doing is a hedge strategy, and I roll those out every 30 days, 45 days to stay ahead of the decay. The longer your options are out, the less the decay is. So it's always smart to roll options that are hedges out. That's the advanced trading tactics. We'll get to that. So anyway, that's what we're looking at right now. Does that take a genius to figure this out? I mean, to know that I'm in an uptrend until I'm not, that I'm in a downtrend until I'm not. Now I'm in an uptrend until I'm not. Make the markets prove the trends wrong. Make them prove you wrong. I'm calling 4,500. Let's just do it. I'm going to call 4,500. Now, can there be pullbacks along the way? Yes, But if we keep going up and we hit 4,500, you heard it here, because I think that's going to happen. Here's that BABA, we already covered it. Here's the long-term trend down, okay? And then the change of structure sideways, okay? Darvas box has been created. It got violated here. It came back up within it in a gap right here. See that gap here? And now we waited, and then boom, we're in it to win it, right? And by the way, you don't have to wait for anyone to say, I think that these things have reversed. You notice they kept getting tighter, smaller here. That's very, if you drew a line through here and a line through here, you got this triangle pennant. Again, that's advanced trading tactics. You got this pennant. I'm giving you free stuff here. You get this triangle pattern, and it's smaller and smaller. Well, something's got to give. Something's got to give. And I said that it was going to be the break higher, and it was, and it's going to be once we move up above this. Well, we already moved above this one, so now we're eyeing this one above 100 is the next level, and then we're going to be seeing this level, and we'll determine at some point where's enough, and either get out or start doing some pretty heavy hedge strategies around it to protect profits. But anyway, can you see it? You can see the change of structure. Again, you don't need to be a rocket science to do this. I see a downtrend. Hey, suddenly we're not hitting all of these new lows. We've got here Model T, by the way, and we reversed back up and it broke the trend line. Now what have we got going? I'm going to start watching to see if the trend continues. And what happened is if you drew this trend line that was the upper trend line and you continued it down to here, guess what? Resistance became now support. The buyers were waiting on the upper trend line, not the lower trend line. How about that? Trend lines, draw them. I didn't do it here because I wanted to show that I draw them all the way, because when I see this, I'm buying. And you could trade this while you're waiting. You could see this Darvas box. Wait till it forms. Here, it's formed. You've got sideways action. It resist, it support, down. You could be buying here. It made Model T. You're selling. Don't be a hero. That's good gains. I don't know what that is. That's in the 70s, and it's over 100. It's $30. $30 a share. You don't need to be greedy on this, right? I would have been out before that personally, but I would have said maybe leave a runner for Model T. Same thing here. We came down to here again. But this is getting too tight. I stopped doing it. Generally, again, I told you the three magic. It happens in everything. 1, 2, 3. It's magic. I don't know why. It's algorithms. That's why. 1, 2, 3. Now something's going to happen. It's going to go accelerated down, or we're going to reverse pivot out of it. My guess, after this long downtrend, they're just beaten to a pulp. We're going to get value buyers, and we're going to head into an uptrend. That's what we've had happening. Again, not magic. You saw 3, condensing triangles that are occurring here. It broke out above this one. You're golden. You're in a really good situation. All right. I have no idea what this chart's telling me. We are not going to spend time on that chart. That's a squeeze chart, granted. I'll give you that. That's a squeeze. I would put this as a squeeze chart, not breakdown and breakouts. But okay, here is a failure of the pattern, and you'll see it. Let's bring it up intraday. Let's talk it first, and then we'll look at it intraday to show you guys. This is a W, and it's maybe a little hard to see, but you had an acceleration, this big candle down, and accelerated. It came back up to here. This is just like on Big C. You remember I drew a line. Where'd it go? I drew a line straight down from here to here, okay? And what you have is you have here, and I draw a straight line because I'm waiting to see if it makes a W. And it came back down. Sure enough, it got in line with my line that I drew, which happened to be in line with here. And then it goes back up again. That forms a W. Now, that is generally a bullish Okay, it shows interest, buying interest is going on. Okay, because the bears are trying to break it down. They failed here. They accelerated, and buyers, there's a block order. It came up, it came down. There's a block order still there, and it came back up. You see these resistance candles. It didn't quite break this high. Once it broke that high, it came back down to Model T, by the way, on the wave, and then it shot back up. So I'm not panicking. You're not panicking. You're in this, let's say you're in this trade. You're like, okay, it came back to Model T. So what? The algorithms are in control. What did you expect it to do? Let the algorithms do what the algorithm's going to do. Then it shot back up. And now at this point, this is your trend line, VWAP. I made it blue on this one and I circled it. And you notice that it's descending because the volume waiting, if there was more volume that had traded, well, this is at the opening. So, but when it's going straight down after the open, that's telling you that the money flow is following it down. If this had stayed up here, it would have told you that most of the money had been trading right here. And even though the stock is going down, it might barely go down, but the weighted average is going to keep it up here. But this one's going down. It came up to it, then you better at least trim when that occurs. Okay, that's your trim point. So your VWAP line becomes a trend point. Write that down. My entry below VWAP, if VWAP is achieved, I've trimmed my position. It came all the way back down. It didn't quite double test, and it formed another W. Okay, not a very good one, but it did form one. And here's the high of that W. It couldn't break it. It did not break that high. When you have your own charts open, you'd be able to see this easy. It didn't break it, and it started going down again. Once this started happening on the trend, you're drawing this trend line as they're forming, you're keeping an eye on it, and suddenly you see the moving averages moving above that trend line. That tells you that there is supply going on. That tells you that it's a failed trade. You are getting out of there. And if you wanted to hold it just to make sure, your stop is basically back to even, and what you made was the trim. So again, if you're a smaller trader, you're trying to build a war chest of money, what you're doing is you're taking it all, and maybe leaving a 10% runner right here. Okay, let's leave a 10% runner in case something happens and someone says we're buying them out for $80 and I can make $14 a share on my calls or my shares, whatever, then that's fine. But at that 10% level, the moment this is lost, you get out. Don't play with it. And most trades, you're going to get out. Okay, when it breaks up here, even when it breaks and it doesn't follow through on the W, you can't break above it. That's not a good sign. And you got your VWAP line is telling you some things. The red line's coming above. At the very worst, this red line probably wouldn't show itself till about right here. These are backwards looking, so that red line will show cross, but it won't show it until 8 minutes later. So, but once you do see it pop up on your screen, you exit the trade, okay? Because you got a downward flow. It's a failed trade, and you're going to have failed trades. Are you upset? No. Why? Because you managed it properly. And I will be giving these managements. You see me on Twitter. Good place to trim. Good place to do this. You smaller accounts might want to exit here. So like RIBN today. You're up, guys. You have to be up because I'm looking at the stock, the call price, and it's still above where we were talking and entering. Don't lose money on a trade. You trimmed up at 16, you made some money, and you exited the trade. Small accounts, you probably trade at least 50% on an account that's a breakout potential. 50% you take off the table. That way you would have made really good money on RIBN. Instead of, I guarantee you there's people that are very sour right now at people for why they call that stock out. Well, because it was at 14 something and it went to 16. That can be a winning trade if you manage it. Okay. This is why the management aspect of trading is so important. Okay, here is MCD. Okay, here's MCD. I had a watch on this. I don't know if I have that. I don't have it. No. Nope, I don't. Well, there was the start of the day. Okay. I had MCD. I think I even gave it to, I did. I gave it as a setup. Go to Twitter, put $MCD at Old Army 1, and look at before whatever date this is, before it shot up, before it broke out. And you'll see a tweet that says, this is one of my watch list stocks. I'm looking to trade calls in this if it breaks. Well, I wake up, I'm in here, and it opens, and it was down here at the close. It gaps open, and it proceeds to rally. And I didn't get in on that at that time. But what would a trader do? Let's do a test here. What would a trader do? What would I consider a small trader? Under $10,000. You can't afford to take hits under $10,000. You can't afford to take 50% losses, 100% loss. You cannot be affording that. On a single trade, you're just not going to do that. And more importantly, you're managing the opposite direction on winning trades. You're taking money to build. You want to be going like this, okay? If you're thinking you're going to go like this, that's a failed mentality. That's a failed philosophy in trading. You're going to go like this. This is how your trading account should look, okay? There's periods where it does look parabolic, and okay, wonderful, but that's not the norm, okay? Yes, who all Alamam. Okay, you win Model T. He said, okay, I missed the entry. I thought maybe it would pause, and I missed the entry, but, oh, see, I don't have my previous slide, guys. This is where I get mad. Okay, here's the gap open. It shot all the way up to here, right? Okay, you can't do anything on this first trade. I mean, it's impossible. If you try to trade the first spike, you're better than I am. But I waited and I saw it pull back. Okay, but I wanted to see it retest. It came back up and it retested up here. Then it dropped to Model T. There was my entry point. And again, I told you I was going in. That was the entry point on the McDonald's trade. Okay. Now I don't know. Here it is. I guess here it is again. That was 30 seconds. Well, it trended up, and McDonald's became one of the best trades of the week. Pull up an MCD chart and take a look at where the stock ended. I think I had a 296 target on McDonald's. I think I tweeted that I'm exiting. I had runners only, by the way. It's not like I'm carrying this full position, all confident that, braggadocious. I'm gonna take all of those calls that I have, and I'm gonna make full premium on up to 296 target. No, I trim at my first level. I trim along the way, and I leave a runner. And the runner is the one that if I get what I want in the market, it makes you really good. It might make as much as the entire rest of the trade made in just the runner, but your exposure was like that. Isn't that the way to trade? I think that's how I like to trade. Okay, so now here we are back at McDonald's. I'm not looking at that again. All right, here's Bank of America. I call this the 1, 2, 3, 4, 5 trade. Okay. And what you have is you entered the trade here, and you're determining, is it going to break out? Okay. You see this little resistance level that it had right here. Okay. Just a couple of days of resistance level. So that's not a lot of resistance in my book. If it had a 5-day resistance, I would be, I don't know, but I'm really going to have to see it prove itself. But here's that candle down. Okay. You got your engulfed candle, just drops like crazy. You have this, it's a smaller candle. I would have preferred to see it go up here and then retrace all the way. It didn't, but the next candle immediately shot up. It's kind of a broken success of that same pattern. Think of it that way, because I did engulf between this candle and this candle. I took this out. I'm entering that trade. Okay, I see it squeezing upwards. I'm still not sure. I still don't know. After you have that first 5 days that didn't break out and a triangle is forming, it enters what I call a 5-day risk pattern. This is really important, guys. If it does not break in the 5 days upward, I'm out. Okay. It has 5 days to convince me or I'm out of the trade. And so many people I know because, hey, I was not OA1 DTS. I was not your managing service to tell you, hey, I'm doing this or I'm doing this. So a lot of you are like, how come the BAC trade failed? Well, because it broke down. Well, it didn't this time. Lucky for them, but some would. I'm just telling you why some will. I give it 5 days. If it does not break up in 5 days, I am out. Okay, wherever it's at. It could be here. It could be here. I don't care anymore. I am out. And yes, some people will say, but the triangle's formed. It's so strong. So many times at the end of this 5-day period, the triangle breaks to the downside. Way more than 75% of the time, it breaks to the downside. I don't want any part of it. In this case, we got lucky because on day 5, it broke through. It broke upward, and I breathed a sigh of relief, and it went on up, and we made a good trade out of it. But this is called the 1, 2, 3, 4, 5-day trade. Okay, so it's the second set. As long as I haven't gotten stopped out in the first 5 days, I will give it 5 more days. If it doesn't break out, I'm out. Okay, make sense? Hope so. Save you a lot of money. Oh, I know who did this. Okay, I'm not going to give a name, but here's a post that I had made on CVNA when it was at $14 to $15 ranging. I had looked for it to break upward. I had a breakout on it. And so I wrote this on there and I said, it's my number 2 trade to watch. Everyone might as well capitalize. One caveat, I've now seen 4 professional traders also tweeting pretty close to my breakout marks, what I meant. When I see multiple professional traders on a trade I've been waiting for, the initial influx of call volume will create a premium pump. If you are quick to enter and are within 10 cents of initial move, then set a sell 50% ROI and enter it on up to half or all, because the adjustment premium IV, we're way into advanced at this point, will retrace almost as quickly as that spike. If it doesn't have continuation up to the moon, the premium that creates in that will parabola on the call options. And we'll talk options. I know people are like, what is options? I'm afraid of options. They scare me. All right, we'll discuss that. There's no reason to be scared of options. I'll cover that in detail on the next seminar. But anyway, so I gave detailed instructions. If you couldn't get in here, the first 10 cents of a move on the options. Now this moved a lot more, but the options may not have moved a full 10 cents. If you were able to get in, wonderful. I wasn't, so I didn't enter. But anyone that did would have been selling up here. And yes, here is your Model T. And so what did I say? Oftentimes the initial move is the only profitable one. That could have been it, right? Because there's a possibility of a flash fail. You guys know once a stock breaks a key resistance level, it often than not retraces back to test that resistance. This is either a loading zone opportunity or it becomes a trap. So I say that a part of trading and you enter, but you have a stop in the stock market if it hits a new low. If it had come to a new low after you enter at Model T, we're out of the trade. It's not a successful trade, right? If it opened at VWAP, which here is VWAP right here, which the VWAP was almost untrackable. It jumped so fast and high. But we came below VWAP on this Model T, which gives us a pretty good indication that there's more money being spent over the past time at a higher price than is being spent going into this, okay? So it climbed to breakout. Lastly, and you know what's coming, be on top of Model T and use it in making decisions on post-breakdown retrace entries. And if it happens to coincide with the breakout level, I would increase the sizing of your risk. That is a magical formula, and more times than not, I cut the rest of that off. Anyway, I posted this. I gave this on a Friday. CVNA did not break out on Friday. we are on Sunday when I posted this. This is the first reply. CVNA is such a piece of junk, though. Okay, I don't disagree with you, but technically and fundamentally, in terms of the trade setup, it was my number 2 trade because of everything that we'll talk about in the advanced seminar that was lined up for this. Okay, so here's the breakout, here's the retrace, and I went. And because of the magic formula, I went in pretty good on this. Okay, and CVNA went net free right here for 100% gain. Okay, there's that Model T level. Here was the open. Don't chase it. It came back to Model T. You enter it. This is, by the way, these are the options. So this is the options following the price of the stock. So see that first spike right up here? Could you get it within 10 cents if it's closed? No, you couldn't. So you wait, and you waited till it came back all the way to here. Here's your entry point. Now you buy. So I wasn't gonna rat you out 30,000. I wasn't gonna rat you out. So it was him. It was him. He said it's a piece of junk. Well, these options ran all the way up to $7, guys. So, that's not a bad trade. It's not a bad trade. So our final sell was at 7-Eleven. Yes, they made it to $8. Did I care? No, I didn't care. I had a target on there, and we got it. What time is it? We still got a little time? Good.
5:30.
But isn't that fun? This is what I want people to experience. And a number of you did experience it. But this is what I want you to experience, is knowing how to trade setups. And then I can I'm more than willing on my screen to show you managing trades of what I'm doing. Caterpillar was another one that he had this uptrend here. I had an alert set here. I had simply clicked alert. I had put it right here. It went off. Again, I have a gap right here initially that's going to be filled. I know that. That's my trim point. Okay. And so CAT opened, and it created this pattern here. And you notice it starts getting a descending triangle a little bit. Okay, you got this top line here, and then you have this coming up this way. So I'm waiting. Here it is. Here's what that looked like when it got consolidated. Oh, when it got consolidated later, looks different, doesn't it? That's why you have to practice and understand and everything, because this looked like a fail, right? This is a fail. Now, I didn't enter the trade there. I waited. It broke out. It filled the gap. What did I say happens typically after a gap fill? Stocks retrace. Okay, stocks retrace. And that's exactly what happened. We failed. If I'm in the trade, I get stopped out because it hit below the previous day's low right here. And so I'm getting stopped out of the trade, and I'm not enjoying any of the gains that occurred. But what I'm doing is now I'm waiting. And what forms? What forms is a reverse head and shoulders. I got a head here. I've got a left shoulder here. I've got a right shoulder here. It pulled back to Model T. Okay, I'm going to go with it. And I tweeted, I'm like, I'm going for this. Okay, we get a reversal hammer candle. That's a long wick with the green all at the very top. That's a hammer. Think of, that's what a hammer would look like, right? That's called a reversal hammer. If it's followed, it doesn't mean anything by itself. When it's followed with follow through, it means something. Okay, and it had follow through, and boy, did it have follow through. It took off. Okay. It retraced. It could not make Model T from here to here. Would have been about right here, Model T. It couldn't make it down to there. It jumped all the way to 238. 238 was my target. I exited the full trade. I'm out. But it came all the way back down, and it retested that previous Model T. It got close to retesting that. So I said, what the heck? And I didn't do as many, but I went back in and was in it. And when it came to Model T, off of this move here to here, back to Model T, it flashed above Model T. This wasn't it. It flashed above it, and then engulfing candle back down. But I sold. Okay, I'm like, okay, there that went. Anyway, that's just to show you how some trades can be managed intraday. I want to get to some day charts. Here's that W though, before I move on. Here's the W. Obviously, you've got the top being broken here. You have a retrace that cannot reach Model T from here to here. That shows strength. When that reversal candle's hit, that's your second line of entry. Okay, this line should be going all the way. That purple should be to here. That's your next entry is when this occurs. Your first higher risk entry would have been as soon as the W is starting to form, because the right side of this W is higher than the left side. I'll take a little bit more risk on, because what's my risk? I'm at 334 at that level. I'm at 334, let's say 334.40, and down here below at the low is 330. Yeah, I'm risking 80 cents. Okay, I'm risking 80 cents a share. So I'm willing to risk 80 cents a share. And so, but it broke up, and once this broke up, there's your signal line. It retraces, but then I don't have the VWAP line. If I had the VWAP line, it's actually right here moving upward with it, and that gives you a lot of confidence that there's buying going on. Support, it becomes support level, and it shot on up, and Microsoft really ran. It became a really big trade. AMT, here's one that we're waiting on, right? So, but if you notice, what did I say about, we had this resistance line, and by the way, just like the baseball analogy I gave, intraday support and resistance means less. It happens at high speed. That means that they can get broken after even getting tested and holding. They can still get broken intraday, same day. If you're on a daily chart looking at it, generally that support level, if it gets broken, or resistance level, if it gets broken, generally you'll see multiple days where it'll hold the resistance level, formerly the resistance level. So the way I would draw the line here is it would be red. I've got my resistance, okay? It broke above it, and so now I would have a green line right here, because resistance becomes support. AMT tried very hard to make a breakout move, and eventually it did break out, and I think it closed today at 194. So it was a successful pattern for entering the trade. Okay. Here is again, this is this pivot looking. You see this? I mean, you guys need to study these and then look in real time. They're going to look a little different in real time, because this is now after the fact. When it's happening in real time, these candles, they're spread out a little bit more and they look a little different, but the same thing is occurring. You're able to see the support line. You're able to see the resistance area. And so you have this center line that's come down, and you've got 3 now points of resistance that are getting, or support that is getting bought, and you've got this resistance level that has been created here. Okay, from this flash above, came back. I'm waiting to see what's going to happen here in the pivot, because I didn't go backwards far enough. If this is at 1140, this has come down. It was up there. It's come down. It flattens out. You guys can go to whatever date this is. When you're 6/9, type in SPY, add Old Army 1. You're going to see me saying, hey, we got a potential pivot here. This is a good time to enter. If you're thinking about trading a pivot, you would stop loss if you find new lows. But it pivoted. It confirmed itself out of the pivot. Okay. I really want to see it break this line. But once it breaks this, I'm feeling pretty good about the pivot, especially when I have VWAP starts acting as a magnet. Thank you. Thank you for that. I'm trying to be as detailed as I can. I'll put notes on the slides in the notes section as well, to give even more flavor to these, so you get more specifics. This is beginner basics. We're just trying to get you to understand these patterns happen every day, all the time. You could spot them. You could learn to see them. When you hear me say, hey, potential pivot, you'll go to your screen and you're not waiting for me to cut and paste. I'm not doing that anymore, by the way, with OA1 DTS. I'm not giving these on Twitter anymore. but you won't hear me saying potential pivot. You will be doing it yourself. I will be saying it to the service group, but I'm saying you'll go to your screen and you'll say, I see it. I can see what you're saying. And that's the goal. Okay. And notice, here's VWAP, it's a magnet. Once a reversal trend happens, your eyes immediately should go to VWAP. That's your first line. I know there's other things, gaps that may have been created intraday, not on the day, but intraday. Those are look to get filled on an uptrend reversal. But your very first eye line is going to be the VWAP. Why? Because it gives you a perfect trim at a very good gain. Okay, so take the gain to trim. And I follow my best suggestion. I'm not a certified accountant or whatever the term is. I'm not that. So my best suggestion is if you're under $10,000 in your account, you close at least 50%. I would even suggest 75% of your trade when it reaches VWAP. Okay. If you're above that, then anywhere from sliding scale 50% down to maybe as low as 20%. Okay. But trim. I trim. Everybody trims that wants to be a successful trader. Okay. Again, things happen in the outside world. Someone could say something and change the tone that otherwise would have occurred, gets busted. So this is disciplined trading. I'm teaching you how to make money. Okay. So VWAP gets achieved. I'm waiting to see if it explodes through, but I'm trimming when it touches it. Okay. Even into it. This candle here is so strong. That's when I trimmed. Okay. I'm looking for that. And if you're in calls, which I always trade these pivots with calls, I don't do them with the shares. You can get a lot more out of it with the calls. So I'm trading it, and what happens is you get real fortunate sometimes because of the magnet effect of VWAP. You get a strong candle to it. What does that do to watch your option call premiums when those big candles are hit? They may be trading at 52 cents by 54 cents, and then that big candle hits, and they'll go like 80 cents, 80 cents to 95 cents. And then suddenly the candle stops. If it just stopped here, like it did here, it'll drop back down to 60 cents instead of 52. So you do get some gain, but you want to be smart with these magnet, points on the markets, because you know they're there and you know they're coming. And all of the other traders out there don't think in those terms, and that's why they're not successful. All right, so you leave a runner. The flash. Hey, we're getting close to the end. 5:38. The flash. Everyone, you guys that know the flash know I love flash moves. Flash moves are when a stock, for every $100 in stock value, you can count on a flash above the big round number. If it's been like BABA right now, is it 92, 90? I don't know what it closed at. I don't care. But when it gets to about 97, the magnet move is in effect. And that simply means a stock at 97, more often than not, is going to find its way through excitement of people and psychology and even the algorithms to hit the $100 mark. Okay, so BABA is going to hit 100 if you see 97. Let's test it out. I just told you that. That also means that when you see 97, hey, you got $3 there. Actually, you got what? You got $4 or $5, because what happens is when they hit those big round numbers, they'll flash above. They'll flash above it, and then a lot of times they'll drop down. And if it is the end of a long squeeze or a long trend up to get to that range, a lot of times that becomes a failure point where you come into a consolidation mode. So big round numbers have a lot of things that can happen around them, but one of them that you count on is the flash move. A $200 stock, you're going to get 202 to 205. $300 stock, you're going to get 305 to 307. A $400 stock, you'll get 408 to 415. Go back and look at stocks when they first broke those numbers, not the second time, the first time they broke those big round numbers, go back test this and see, and just think about a $400 stock breaking 400 of what that means to you. If you're trending hard on a day and it's busting through 400, just get ready to see 408. That's all I can tell you. When HD busted 300, I think it was HD, we were in it, right? And I said 305 to 307, and okay, I put it in here. HD, another watch list. It's been a swing trade, locked in a tight $10 sideways channel. Here's the channel. These are the setups that I'll be giving to you guys in the service. I tell you what to look for. I tell you how to set your alerts. And then I'll send out a text message on the ones that I feel have the highest probability of not flash failing, not showing a RIVM today. It flash failed. It flashed above that 1580 resistance and it failed. I don't want those as much for the text messages. Not that that won't happen, which is also why you still follow the disciplines. Okay. Not if Taylor just texted this as a trade and then it breaks that 50. Don't stay with it. Use your disciplines. Okay. Just because I said and it happens doesn't mean the follow through is going to happen every time. That's why the discipline is so important. But here it is, sideways movement, set alert above the highest wick. Well, that's an easy thing to set, right? So you set your alert. And then that was June 6th. 2 days later, what are we at? 297. I think the wick was 297. 87 was the wick, the highest wick. So as soon as that got taken out, you buy your calls. It hit 300 and it shot up to on June 8th, 30,000. Help me out. What on June 8th did HD was its high? While I continue on, I tell you what, don't pass that around, please. Because you'll change the dynamic of it if it goes to hundreds of thousands of people. That would not be a good thing. You will never see a book written with these in there. I don't want the programmers to go, let's account. We're going to call this the Taylor software program. Watch us sucker him into not selling. So anyway, did he find it? So what did HD close on, or the high on June 8th? June 8th, the high of HD. We're going to continue on while we look for that. Okay, the squeeze. This is yesterday's. We're going to end with these two charts for this, and then I'll come back and finish recording a video. You'll know to start at the squeeze if you want to see the rest of it. So the squeeze is simply when the algorithms are set up to not give the bears a breath. They are going to hold your feet to the fire and crush you. And this happens both directions. The bears do it to the bulls. The bulls finally get to a point to where they say, here it comes. And what they did is they waited until the previous day. If you look to the day before yesterday, there was some hope from the bears that maybe there was I can't remember the signal, but maybe there was something there forming. Yes, I'll talk to VWAP in depth, actually. Yes, I will. But here it was, and I had put a message in the forum. Again, this is not a forum you have access to. You'll have access to the OA1 DTS forum. But in this forum, I had laid out a scenario. And I had said that if we break down below a certain level, then you're going to go with that trade. But if the futures were down 14, I believe, 17 on this day. If futures come back and we come ahead above the previous day's close, then look $1 to $2 above that price and buy calls, expiring calls. And those expiring calls are going to cost you $1 to $2 above. They're going to close, but what was, 305.45 was the high. Thank you, Jeremy. So 305.40, there you go. So HD closed at 305. I don't care if it went to 308, the high end of that. I had myself sitting at 305 and out. Okay. I counted on the flash to come. It did. I also, by the way, what if it the rare occasion it doesn't flash to the 305 level or the 203 level or what, by the $100 mark? Well, what I have then is a stop. So I have a trailing stop. I have basically a set either direction and it doesn't trigger until it breaks 300. In other words, my stop won't trigger until it breaks 300 because I don't want to get artificially stopped out while it's working its way to it. But generally, if I'm present, I'm going to be watching it and I'll just cancel the trades. I'll cancel the stops and then I'll be ready based on what I'm seeing on the chart. And I may decide to go out. I was out fishing that day.
It's 5:45.
Okay, yeah, 545. And but it filled. I didn't know that it had broken 300 and it filled. But the squeeze here, you see, the bears, they did not give a Model T. They did not give you a breath of air. And then came the punch button. When they said, if you don't think you're going to get squeezed out of your short entries from yesterday, watch this. And they went into overdrive. So you trimmed up. So you bought up and you got a $1.50 move. Well, that's got to be making your $1, $2 calls. They probably cost you anywhere from, if they're at $2 away, they were probably 36 cents or so. And your $1 away would have probably been around 75 cents. But they would have at least doubled by reaching $1.50 higher than the price that you would have entered when it came above the close of the previous day. So you get your net free. You sell 50% on expiring calls. 75% if you're under 10,000. Again, let's keep these rules kind of flexible, but 75% with a trailing stop to not lose money, not to protect 100% of the 50% gains or 100% of the 75% gains by adjusting up your stop. Okay, we'll get into that in advance. But because this became so easy for us, following right here, the 8 EMA became a rudder for this thing. Now, I did sell the majority of mine out here. I'll tell you that because I'm like, yeah, it could violate the 8 EMA here. So if the rudder is going to get broken, I'm going to bail after such a huge. The gains on those guys, I can't remember what it was big. It was a big number. Didn't have to have a whole bunch of them to have a good ROI. But here's the full day. It had another leg. So I left a runner, and so I closed out the runner. I closed it out somewhere in here. I didn't get the full run, but I got a good continuation of the runner. So that's the runner. So if I had sold 50% to get my money back, I'm at no risk from about right here. I have zero risk. Hey, there is a Model T that, no, not really. Nope, didn't achieve Model T. Okay, so I'm out. You're out. 50%. You got your money back. You cannot lose now. You're not going to create a sorrowful event. And now you're just waiting to see what unfolds. You have your stops are going to be trailing somewhere down here at your initial entry, wherever that would be. So you have a long way of protection now by doing that. You got 100% return on investment. You've sold, and now you're just riding the wave. And this move here is what is that? 438 to 441, guys. That's a $3 move. You're in a 437 call or a 438 call, and you're sitting at 441. That's $4 or $5 a share natural move in terms of value of the option premium is going to spike. It was ridiculous. When you spot a day like this, and I said, the squeeze is on. You should have been so confident on days like that. And we had one several weeks back, and I know someone in the forum says, how do you see those developing? Well, that's advanced. We'll get into that in the advanced seminar. Okay. Here's VWAP. I'm covering you. This is the last thing, and then I'm out of here. They're going to be yelling at me in there, aren't they? VWAP, volume weighted average, is a technical analysis indicator used in intraday charts that resets at the start of every new trading session. It's a trading benchmark that represents the average price the security is traded at throughout the day based on both volume and price. So it's not taking, it's not taking Model T. That would be if I took a Model T for the day from the high to the low, that would be coming in through here somewhere, wouldn't it? Right? And but if I take it for all of the money that's being spent and taking the price, you get VWAP. And when it's above your stock, there is a tendency for that to get tested. Okay. And if you notice, it tested and failed. Well, you could trade. There's a Model T. I mean, let's just finish with this. Look at this. Look at this. Let's say that you shorted here. Let's say you didn't trade the breakout. Well, let's say you did. You trade the breakout move. I mean, it's pretty clear, right? You got a downtrend. It broke above. You got this candle. It tried to reverse. This one does fully reverse this. You wait. Now I'm in. I go in. I get up to VWAP, and I'm out at VWAP. You could buy puts simultaneously if you're really brave. I didn't, but it came back down to Model T on this move, and then it moved back up and tested VWAP again. I think it eventually did break through this, but anyway, look how VWAP acts. I mean, you're going to be looking at these things in real time, and it does look pretty much like this in real time. So it's one of the easier indicators to see during the day. So when you see an extension of a big sell-off and then you find a pivot and a reversal, the deeper the sell-off and the reversal, the happier you are, because the further away up to VWAP you have to trade looking for VWAP to be achieved. So I actually like the deep dives that occurs that just totally wrecks below the VWAP. So yeah, here's the VWAP line showing you on this day. This is Tesla, and Tesla's been a monster. So it jumped up at Model T here. It jumped up at came back below Model T, flashed, and then came back. And then it just rallied like crazy. That's a big move, by the way. That's 167 to 173. That's a big move. If you're in at Model T down here, you're not getting scared here. All right. Your stop is down here. Okay. You're in calls, so the risk is lighter than to shares. And so but you don't get panicked. I mean, okay, so we had another move up here, and I'm going to look at my Model T. I know what it's going to be, and it broke below, but look at this. I give it a couple of minutes. It broke back above, and then it rallied. And then the rest of the day, VWAP became a support. It violated it here, quickly broke above. Look at it. Look at it testing. All of these become areas for you to be paying attention to. If it significantly broke through VWAP, okay, and your trend line here, okay, then you should be getting out, okay. But it stayed up and it hit a new high here above here, and then it came back and it violated VWAP and it ended somewhere around there. So, okay, guys, I hope that this has been valuable. Will there be details on how to subscribe? You're already subscribed to OA1 DTS for the first 30 days. This includes today, whatever I'm putting together. If we have to have another seminar because I failed to get through everything today, that's included. And then the advanced trading seminar is included. And then the 30 days free access, because I want you to see everything that we're showing you here. You're going to be able to see happening in real time. I'm trying to take the mystery out of this. This is my company. We were in the contact center business. You guys know I've been a professional trader a long time. You guys know I did a seminar 2 years ago. I think it sold out in less than 30 minutes. We did a second one. It sold out in less than 30 minutes. And so it's been 2 years. I had a contact center business. This Jeff here was my chief operations officer. Basically, I've taken the talent of the team and brought them into OA1 DTS. Jeff is a technical wizard. So he's both a operations and a chief technical officer now for OA1 DTS. we will be layering a lot of things as we build and grow. I'm bootstrapping it from the way I approach building a business is I let the business pay for the business. So as we gain membership, we're going to pour those dollars into creating other tools that are not offered in the marketplace, and go from there. So at any rate, yeah, you'll be able. You have all that. You have 30 days access, and then at the end of 30 days, it's $100 a month. If you can't find a value in trades that can make you $100, then you probably don't want to be a member of OA1 DTS. But I'm pretty confident that you're going to be able to end with positive balance sheets. So anyone that followed in Target, I mean, I pounded the table in Target. I know very good friends that we got in Target at the bottom, and it jumped up $12 a share, and I had people sell half of them. Of the shares that they bought. I exited my calls yesterday. You saw the tweets. I'm out. I'm getting out of those. I'm holding my shares. I don't care what happens with them short term. And if we get a Model T, which you guys now know to go be calculating, since we had a pullback day today of $3 or $4 on that stock, you're calculating the low to the high, and you are sitting like a hungry dog sitting at that Model T level to rebuy those shares that you sold. Probably it's $6 lower than what you sold them out. If the good Lord gives us a $6 entry again to repurchase those, then thank you, say a prayer of thanksgiving and enter those trades, go back into those shares. And what you would do is when it hit back to that Model T level again, you don't wait for a new gap to close, which is 144. I think it will get closed. But when it hits Model T, you take those $6. Okay. And now you've built a $12 cushion, a $12 cushion between the lowest price Target traded at. Do you think you could survive a correction with that type of a skill set? So we'll be going into all of that. Anyway, appreciate you guys. I hope that this has been good. Please email me feedback. We don't have a sheet saying, hey, was he too quick? Did he do that? Give me feedback at the website. At the email, and we'll wade through those and incorporate those thoughts into future presentations. Okay, appreciate you, and we're out of here.